Kongsberg as well, for the tune of about €2.5 billion. So prepare, Guy, for some sort of big move in defense stocks alongside perhaps energy this morning.
Yeah. Buying Europe seems to be the theme. We're going to have a great story comparing and contrasting the luxury sector and the defence sector a little later on in the programme. But let's now talk about the market open. It's time for the opening trade. Let's show you some numbers. We're anticipating a positive start this Friday based on what? Well, the loose idea that maybe Donald Trump once again is issuing a 2-week timeline for something to happen. He's used it in the past for trade, for all kinds of other stories. Now we're applying it to whether or not we are going to see the bombing of Iran. The Stoxx 600 is up by 0.1%. The FTSE 100 is up by 0.3%. The IBEX in Spain is up by 0.3%. These are not dramatic moves, considering as well that we've seen a week in which we have seen stocks lower. But it's interesting that we are up going into a weekend when the situation can evolve quite significantly in the Middle East. So we'll wait and we'll watch and we'll see what happens. But we're climbing a little bit now. Let's call it 0.4% on average. Critty, Lizzie, what are we seeing in terms of the sector story?
Well, at the bottom of the basket is energy, and we have, of course, Brent weaker today. It's down 2.5% at $76 a barrel on this relief, as you say, about the White House saying that Donald Trump's going to wait and see whether he wants to get involved in the Iran-Israel conflict. But every other sector in Europe is in positive territory today, and it's travel and leisure leading the gains up more than 1%. Autos and parts not far behind, and tech not far behind that. Just in terms of some of those individual stocks that Joe was mentioning earlier, he mentioned Berkeley appointing the CFO as its CEO, and those shares were actually down 0.2%. He mentioned Eutelsat raising this 1.35 billion euros to build Europe's Starlink rival. Eutelsat up 5.3%. So traders really liking that announcement, Critty.
Absolutely. But in terms of the broad macro picture, it's reversal from the trades that we've seen in the last couple of days. For example, in the last couple of days, every day at 8 o'clock, we would see BP, Shell, Total at the top of the pack, really resisting the broader risk-off sentiment that you see. Today, it's the exact opposite. In fact, what's dragging the benchmark down amid a sea of green is, again, BP, Shell, Total, which tells you right off the bat that this is just a little bit of a rotation. It's light volume. It's light liquidity. The U.S. was off yesterday as well. It's likely to be light trading today. So that's all feeding into this. And I think, Guy, you mentioned triple witching as one component. But
people have also just you're using these just basically to trade in and out. Here is a proxy for what is happening in the Middle East.
Vehicles of volatility, absolutely.
And that's a great phrase. Then that is what we're seeing, sort of in and out, in and out. But I don't know where we'll be by the end of the day. This is... Donald Trump has given us an arbitrary 2 weeks. The market seems to be latching onto the idea. And you can kind of understand the arithmetic on this. Yesterday, it felt like a racing certainty that the US was going to be involved, and fairly soon. We've now got a slight change in the kind of the bid offer on that, on whether or not it comes today, tomorrow, or in 2 weeks' time. The narrative has shifted just a little bit to the right in terms of action not happening, and you get that being priced, and that appears to be just what it is. But we don't know. 2 weeks is a completely, he keeps using it, a completely arbitrary time frame. So we don't know what's going to happen over the weekend. We don't know what's going to happen next week. We're just kind of, as we discussed earlier, treating the oil stocks as a proxy for what could happen or might not happen.
Well, let's bring in Kieran Nandra, Head of Equities at Jupiter Asset Management, for some analysis. Kieran, I'm trying to make sense of this. We're all trying to make sense of this. Green across the screen for European equities, US futures lower. As Guy says, we're trying to interpret the geopolitical risk and what's really in Donald Trump's mind. Who's reading the room right?
So I think in terms of where we're seeing kind of the sea of green at the moment, that's absolutely just that relief trade, if you like, about today's news. But to your point, what is going on in people's minds, that's going to be incredibly difficult to interpret. But I think what I would try and do is just take a bit of a step back. I think we are seeing a return of risk appetite back into European equities. That's over that kind of medium to long term. We've seen a lot more positive pronouncements over the last even kind of 3 to 6 months. One thing I just maybe want to focus on is a little bit around, we're seeing manufacturing PMIs that are actually looking a lot more positive versus services PMIs. And that's been for the first time since 2021. So I think what we're seeing actually is a lot more, return dispersion within European equities. And I think that gives the asset class a lot of legs.
But not to be gloomy, I just want to come back to this 150 number. Jennifer McEwen at Capital Economics yesterday flagging you could have oil going to $150 a barrel if Iran retaliates in a major way. Yeah. Where does that leave European equities?
So I think just maybe just taking it again, so in terms of oil, I think how we look at it in terms of our bottom-up kind of stock selection, we'll be looking much more at how that's impacting particular types of stocks and industries. So we'll be looking at supply chain resiliency. But just on that oil point, I mean, if we think about Iran is producing 1.5 million barrels a day. You've got OPEC spare capacity of around 5 million barrels a day. There's still a lot of give, I would say, in the in the sector. But in terms of how it actually impacts European equities, there's a lot of much more domestic plays as well that we're able to kind of leverage off of in the European space. So that's those domestic names, those smaller cap names in particular are having a real kind of renaissance, I would say, and we would expect that to continue. So I think just in terms of that big term picture, there's still about a fair amount of capacity, but we'd be looking at companies which have those much more resilient supply chains that can kind of deal with the kind of higher oil prices.
Talk to us a little bit about the go-to trade that was so popular in the first 3 months of this year, that is European defense, ultimately, bolstered by this idea of German fiscal spend. Yeah. That hasn't, even in the face of geopolitical risk, hasn't seen the same momentum in the last couple of, days and weeks, I would say, as did in the first quarter. Is there a valuation question to be had when it comes to the defense sector?
So for the defense sector in particular, so those stocks have done really well. I'm thinking about specific German names, but in terms of what we're seeing earnings revisions, those earnings revisions are still looking really strong. And I think for this sector in particular, it's really where is the incremental growth going to come from? And so we're still seeing in terms of defense, in terms of infrastructure, those are still big tailwinds for the sector, and actually just more broadly for European stocks in general. So you kind of mentioned defense stocks, but also just that kind of more cyclical sectors and cyclical industries. Those still have a lot of levers. I'm thinking, industrials, financials, as well as defense, and those still have a lot of legs. So we're seeing again those earnings revisions still looking good, and we've also had, for example, Q1 earnings, and those have been pretty positive.
Well, a lot of that though is promises of contracts at the end of the day when it comes to the defense sector specifically. But when it comes to a defensive trade, ignore part of the pun, if you will, we're starting to see it show up in European tech names, again, very similar to what we saw in the States. We're seeing it in healthcare as well. Two areas that are directly, I think, exposed to trade negotiations and policy out of the United States. Yeah. Why would that be the defensive trade in this market?
So I guess those stocks have typically been much more that kind of quality growth. So when you've got that kind of more risk-off environment, it's the it's those companies that are perceived to have bigger moats, and so that's been one reason that's been driving those types of names. But again, I think we would caution about having exposure to those export-led sectors, and actually those are the sectors which have that higher sensitivity to bond yields as well. So if you are expecting a more normalized interest rate environment, those aren't necessarily the sectors that we want to be those kind of more kind of quality growth are not those kind of types of sectors that we'd want to be exposed to, because they have that kind of double vulnerability.
You said a number of times this morning, it's got legs, that the European story has got legs. It feels like it's run out of puff, if I'm being honest, this morning. Last couple of months, European stocks have just gone nowhere. Yeah. I'm looking at the breakdown for the last month. The only sector, there's two sectors in positive territory over the last month. Energy, which is up 6%, massive 6%. Every other sector, bar real estate, is in negative territory. Autos are down by 10%, retail's down by nearly 10%, luxury's down by 8%, 9%, media's down by 8%. There's some really big heavyweight sectors that are massively underperforming. The only reason European equities are holding up right now is because of a handful of energy stocks that have done relatively well over the last month. But even in that phase, that last month, European equities have rolled over quite significantly. Isn't there a danger that the kind of the momentum, and I've seen this movie before one or two times, that Europe promises a lot and then fails to deliver? Are we getting to the fail to deliver phase? Why are we not, if we're not, seeing that?
So we are incredibly sensitive to that. And if you look about valuations, they're at 15 times. They're not screamingly cheap at the moment. So in terms of where we are today, I think European equities are stuck in a bit of a holding pattern. That's kind of compared to the 9th of July tariff pronouncements. But also, are we going to see that cyclical upswing that comes through in 2026? So you're absolutely right. I think in terms of what we're seeing from the European Commission, that will take time to come through. But I just mentioned, for example, manufacturing PMIs. That will again take time to play through into equity markets. That's looking a lot more positive. If you look at, for example, capex to sales ratios, those have increased at the highest level in 10 years. So that tells us that bottom up, what companies are doing are actually investing in growth. And that's something that we
do you believe those PMI data? Do you believe that PMI data, in as much as it can be skewed? The relationship to the real economy has been at best mixed over the last few years. And B, the tariff story has created a lot of, particularly in the manufacturing sector, front-running. And we have seen front-running into the States, front-running into various markets because of the tariff threat that exists. So you've got to get the goods in now. And basically you're selling forward in terms of some of the demand.
So is that kind of front-loading? And so those manufacturing PMI numbers have been linked into, I guess, industrials and capital goods. But behind that, we've also got big spending expectations, and that's going to happen for defence and infrastructure. And so those are kind of really, really big numbers that we're expecting in terms of, the impact on GDP. We're still thinking about, 40 to 50 bips impact, positive uplift to GDP for European numbers overall, and that will have a positive impact on equities as well. So I think we are stuck in a bit of a holding pattern. We are seeing bottom up that those capex to sales numbers are increasing. That shows to us a bit of a mindset shift towards growth, and companies now investing in growth in the way they haven't done historically. So, but to your point, I think we will need to see, and it will be incremental. It's not going to be linear. It's going to be kind of incremental process that develops over time. But we're seeing that kind of bottom up positive signs.
Karen, a lot of the issues you just talked about are the same conversations being have had at central banks around the world. There are, I'm going to start with the U.S., there are 2 cuts priced into the bond market from the Federal Reserve, plenty priced in from the ECB, the BOE, et cetera, and around the world. Are cuts priced into this equity market?
Our cuts are priced into equity markets. I think, again, when it comes to what's actually priced in terms of expectations, I think for the banking sector, that's a sector that's been doing very, very well. But I think in terms of, I think there's still room to go, in terms of whether that's been priced in or not. There are certain sectors, again, which are the cyclicals, which are much more positively exposed to that, and so there we'd be looking to get more exposure to those types of names. And again, that would be positive for some of those more defensive stocks.
Kieran, nice to see you, as always. Thank you very much indeed for stopping by and seeing us. Kieran Nandra, Head of Equities at Jupiter Asset Management. Core 6 looks like this. You are looking at a largely positive picture emerging. In terms of where you are seeing the strength, you are seeing it in tech this morning. So ASML is a little higher. You're also seeing that in Schneider as well, which is a kind of tech derivative trade. A little bit of safety in Nestle. It's interesting to see that Novo is off this morning. The real trade, which I don't have on this board this morning, is what's happening with the oil story. But fortunately, Joe's here with the details of that.
So that is where we will start indeed, Guy, because we are seeing significantly lower energy stocks today. We can actually see the Stock 600 energy index coming down around 0.7%, with the crude oil price declining around 3%. I was seeing BP, Shell, TTE, Eni, all of those dropping at the open of trading. And there we go, confirming it right there. We've got Shell down 1%, BP 1.3%, Total, Eni, all of them trimming their recent gains. Remember, up around 7% over the past month, one of the best performing sectors, or if not the best performing sector. And this is feeding through as well, importantly, into airlines, because airlines, actually the best performing subsector this morning. We're seeing all of them gaining because the lower crude price does actually mean that we could potentially see easing concerns around the jet fuel prices. The screens can't keep up with me today. I'm moving too quickly, but take my word for it. We are seeing airlines rising. IAG was at the top of my screen, And we will move on, though. We'll look at Barclay Group, I should say. Always a difficult one to know how to pronounce that one. I do believe they go with Barclay. But the stock down today. Analysts saying the guidance is disappointing on this one. JP Morgan saying that actually the guidance wasn't good enough. The numbers in the past quarter look pretty strong for the home builder. But the stock really hit hard today on the concerns around the outlook, not actually firm enough. And here we've got that wonderful chart that I actually made myself. I'm very pleased and proud of this one. Barclay, one of the highest value home builders in the market at the moment, but the stock coming down again. So actually those price to books might actually drop a bit this morning. Then in terms of Eutelsat, this was an interesting one because we did see that fundraising getting 1.4 billion euros of cash, but the stock was bouncing around at the open of trading. It was down and now it's up again. Another note I saw, again, it was JPM. They were saying that the company really throwing good money at bad because the company's got so much debt, so much leverage. This, although it's 1.3 or 1.4 billion, it won't actually solve all their debt issues. So a bit of concern, bit of volatility, but the stock managing to gain very slightly. Over in M&A, UniCredit getting conditional approval from the European Union on their takeover of BAMI, that one they've been trying to do for a while, but still uncertainty around whether Italy will approve it. So not yet a done deal, but the stock for UniCredit is higher. And then finally, in the hearing aid space, this is a big company, Sonova. It's worth about $20 billion in terms of the market cap, but it's downgraded at Barclays. It says its partnership with the US retailer Costco probably not going to be as good as expected, and that one significantly underperforming over in Switzerland this morning.
Joe Easton from our equities team, we thank you so much walking us through some of those early movers on this Friday session. As he was speaking, we do see some headlines crossing from Iran, specifically on, of course, where these nuclear talks lie. These comments coming from the Iranian foreign minister talking to state TV, saying that they don't want to negotiate with the United States as Israel strikes. They will only hold nuclear talks in the EU meeting. Of course, those foreign ministers due to speak today in Geneva.
Doesn't that somewhat vindicate the European stance, where they're kind of taking Iran at face value, where, you know, they're not just seeing the nuclear program as for military purposes? When we were talking to Barbara earlier, she was kind of saying you need to get real. And the US is real about this, but this is precisely why Iran doesn't want to talk to the US at this point, because it's so obvious that the US is on Israel's side and not trying to mediate between the two. It's one interpretation.
It's one interpretation. I don't know, is the honest answer. I suspect the Iranians are trying to find an alternative means, but whether that's great.
Yeah.
Nice. Yeah, fantastic. You guys go and talk, but whether or not actually the reality of the situation delivers anything tangible.
It's absolutely true. But if there is a question here of where those talks are happening, if any, it's happening via, to your point, the Europeans and the Iranians at a place where they were supposed to happen in Oman as the diplomatic people there. And Barbara, we talked about that. Who is actually talking about coordinating those conversations? And that is perhaps where the Europeans have a little bit more power. The effectiveness, as Guy said, completely up for debate.
Yeah, but surely the hope, the reason that the market was latching onto that 2-week delay is because they're taking the signal that Trump is opening the door to negotiations. Does he really take the negotiations seriously? We'll have to see. Coming up on the programme, Rheinmetall replaces Kering in the Euro Stoxx 50 today. It's a story of Europe's resurgent defence sector, as we were just discussing with Kieran, and its struggles in the luxury space. We'll bring you all the details next. This is Bloomberg.
The most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome back. 20 past the hour, 20 minutes into the equity market session, and we are higher. There you go. Look at the green on the screen that you are seeing right now. Does seem as if people are taking, on balance, the idea that maybe risk has reduced as we watch Donald Trump talk about the idea that he will make a decision in the next 2 weeks. Like, everything is in 2 weeks, but within the next 2 weeks, we are going to see a decision made by the president as to whether or not he will involve U.S. forces in Israel's move to end the Iranian nuclear program. All of this is causing significant consternation, I have to say, amongst the global airline community. American Airlines suspending daily flights from the United States to Doha, the capital of Qatar. United Airlines pausing service to Dubai because of heightened tensions in the Middle East. You've got oil prices to factor into your thinking. You've got closed airspace to factor into your thinking as well. We're also waiting to find out exactly what happened with the investigation, what is the ongoing investigation into what happened in India. Let's talk about all of this. Bloomberg's managing editor for global aerospace and defense coverage is Bloomberg's Benedict Camel. He joins us now. Benny, good morning. Let's talk about kind of the latest in terms of the challenges that global airlines are facing. The Israel-Iran war obviously is causing multiple issues. In terms of the response, cancellation seems to be the easiest thing to do right now. Where are we seeing them and where?
So we're seeing them really across the board, but principally last night we saw them out of the US. We had American Airlines cancelling flights into Doha, the capital of Qatar, and into Dubai. We have United Airlines cancelling flights. And Doha and Dubai are obviously very important hubs. They are really connective super hubs in the Middle East. A lot of airlines funnel their sort of east to west and the other way flights through those two hubs. So to cancel those is a fairly robust signal. We had seen cancellations to Israel, obviously, over the last couple of weeks. Companies like Lufthansa, like Air France and so on, have cancelled some flights into the region. Tehran, Lufthansa was one of the last airlines to still fly there, one of the last Western airlines. That's also cancelled. Those were sort of the obvious ones, but for this to now go wider and to go into places like Doha, like Dubai, that shows that there's a significant concern out there among airlines. You know, the simple concern might be we don't want aircraft to be stranded in the region. If you look at places like Jordan, like Beirut and so on, that's where a lot of the flights have been cancelled, and you don't want your aircraft out of position if that airspace gets closed. Obviously, far more seriously, you do not want your aircraft to get shot down, to put it very bluntly. So there's a lot of caution out there right now, and that's what we're seeing in terms of the response.
So, Benny, there are real dangers of flying through these zones then, but how does that closed airspace make things difficult for business? How significant is it for business?
It is becoming increasingly difficult. It's something that we've seen over the last couple of years, frankly. The Russian airspace, the Ukrainian airspace, those have been closed to many airlines. Some airlines like Emirates, they still fly through that airspace, but most Western airlines have avoided the Russian airspace, the Ukrainian airspace. So a reminder to people that this is 10 years ago exactly that MH17, the Malaysian aircraft, was shot down over Ukraine. And that was really a sea change for the industry, a real rethink in terms of the safety of flying, even at high altitude. But the zones that now are closed or the airlines are avoiding, those are important zones. Obviously, Israel's a small country, but it sits right at that intersection of a global air path, to the Middle East and then beyond into Asia. So closing that additional airspace is, quite difficult for airlines. We had the India-Pakistan situation. That seems to be a little off the boil at the moment, but still some airlines wary of that. So a lot of that space is becoming much harder to fly across, and airlines have to circumnavigate it.
All right, Bloomberg's managing editor for global aerospace and defense coverage, Benny Campbell, walking us through those risks to the aviation space. But he also mentioned the defense component as well. Let's go there next. German defense firm Rheinmetall set to replace Gucci owner Kering when it comes to the Eurostoxx 50 benchmark today. Charlie Wells is here to talk us through the change. So defense is more in fashion than fashion?
Oh, that was a good one, Critty. And yes, basically this is kind of an indication of kind of a shifting European economic situation, right? Where we've got much more of an emphasis on defense. You're now getting a less of an emphasis on these kind of fashion firms. And this is a kind of case in point, right, of this firm, Rheinmetall, having a stellar May. And so they've been fast-tracked into that blue chip index.
We had a guest on a few minutes ago talking about the idea that actually the PMI, the manufacturing PMIs, are telling us that there is European renaissance in that space. Is this is what we're talking about, basically, isn't it?
This is a singular data point that makes that point, right? It's evidence for that. And I think it's this sort of European defense story, but it's also that kind of reshoring or closer to home supply chain story, right? Because we know that one issue that European governments have had in recent years has been, yes, we want to increase our defense spending. Oops, we're buying all of these munitions from the United States. Yeah. They don't want that. So Rheinmetall plays into that important narrative too, which is let's have this European defense come from European companies.
Charlie, we've had Kering poaching the boss of Renault. How long is it going to take to drive itself back into the stock 650?
Yeah, that's a really good question.
Like terrible jokes this morning.
You guys are good.
Excellent jokes. Excellent. These are jokes are done, guys.
You guys are good, but it's hard to come in and out of this index. I looked back, and actually in 2011, Unicredit fell out. So did Nokia. Both those names are back in it. But the issue here is momentum, right? So because when a stock enters this index, it gets momentum. There's ETF buying, of course, and so it's really hard to keep pace with that.
We wait to see it. Kering's acceleration.
If I made these jokes, they would be dad jokes, okay? I'm just going to point that out. And I would be pilloried for them.
This is the effect you're having on us by association.
My work here is done.
Bloomberg's Charlie Wells, we thank you. No dad jokes from you, thank God. Coming up on the programme, how would escalation and Western intervention in the Iran-Israel conflict play out? We're going to speak to former Lieutenant General Simon Mayle next. This is Bloomberg.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we don't want to lose you, Emily, in all of this?
Stargate, put that name down in your books. What we're undergoing right now is sort of the largest infrastructure build in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real. How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
About 30 minutes into today's session, we are seeing green on the screen, although perhaps pairing some of their opening gains when it comes to the stock 600, higher by 0.5%, outperformance when it comes to the German complex. A lot of defense stories in the mix today, not necessarily a thematic theme, but you are seeing a couple in terms of M&A income, in terms of stakes, in terms of investments as well. So we're going to keep one eye on that, but also keep in mind, Europe has been down for the last 3 sessions. So light volume, light liquidity, likely pushing some of the green on the screen. In the meantime, let's go back to our top story this morning, which is, of course, in the Middle East. Iran's foreign minister due in Geneva for talks with European foreign ministers today. Bloomberg's Oliver Crook is all over this story. Ollie, walk us through what we can expect in Switzerland.
Yeah, so what we're going to get today is the Iranian foreign minister, as you mentioned, they're arriving in Switzerland and Geneva, speaking to his counterparts from Germany, from France, from the United Kingdom. We understand the EU High Representative Kaja Kallas will also be in that meeting. And the ambition of this meeting, we should say this is the first time that this constellation of people has met in person since the beginning of the conflict about a week ago. They did speak on the phone on Monday. And what they're trying to provide here is trying to work out basically a framework for monitoring of Iranian nuclear production and the new Iranian nuclear program that could be implemented in the event of a ceasefire and could be a step towards peace. That could also include things about their sort of cruise missile program, maybe diminishing stockpiles, and trying to come together with an agreement or some sort of framework that could be used. The problem that you have here is, as far as the Europeans are concerned, they have very limited diplomatic clout in the region. As we know, on Israel and on the Iran, they have very limited amount of leverage that they can exert. And we know also that the Trump administration is not terribly interested in sort of collective diplomatic efforts. They're really going to want to put forward their proposal and say what they want to happen. They're not really going to necessarily rely on what the Europeans have to say about it. So listen, it could be helpful in terms of getting a conversation going, potentially getting information over to the United States. But at the end of the day, it's going to be the United States that decides this, along with Israel, in terms of the terms of how they come to the negotiating table with Iran. So yet again, Crady, and yet again, this conversation that we keep hearing about, a geopolitical event across the global stage where the Europeans are going to act basically as spectators and not protagonists.
So, Ollie, beyond nice noises, beyond calling for de-escalation, what do you really expect the plan to be to emerge out of this?
Well, listen, we'll have to see what comes of it. It'll also come of what we get from the sort of bombing campaign, how intensely that goes forward. We have seen, Donald Trump come out with this sort of 2-week period of time. We know that the Trump administration and Trump himself likes to buy himself a lot of time so that he can sort of improvise as sort of events tend to accelerate and move forward. I mean, we'll see a little bit later. I think that we have, again, if we want to demonstrate how limited the Europeans are in exerting their influence in the region, particularly on Israel, it's in the last few days we've heard and weeks we've heard from European leaders having more and more issues with the way that Israel is conducting itself, particularly with humanitarian aid within the Gaza Strip. We've seen a lot of complaints. We've even had the Germans come and complain about it. We have had a petition that's been signed by basically 17 of the 27 EU member states to look at revisiting the EU-Israel Association Agreement. That's an economic pact in order to potentially exert pressure, but that is not really something that the Europeans can do at this stage, exert pressure on Israel or on Iran. So again, I would be sort of limited in sort of the ambitions about what we get from the Europeans today, but again, potentially something that behind closed doors could make it to the Trump administration and could advance the conversation.
Could, being the operative word there. Ollie, thank you very much indeed. Oliver Crook joining us in Berlin as we watch events unfolding a little bit later in Geneva. Let's carry on the conversation and get some analysis on what we can expect. Sir Simon Mail, a former Lieutenant General in the British Army who served as the UK Defence Advisor for the Middle East and Security Envoy to Iraq, joining us around the table. Sir Simon, good morning.
Good morning to you.
You sat down a couple of minutes ago and you said, we all know which way this is going.
Yeah.
Which way is this going?
Well, which way this goes is the end of the Iranian nuclear program.
Okay.
Now, there are ways of achieving that. That's exactly what the foreign ministers are trying to impress upon the Iranian foreign minister, that the Israelis won't stop. The Americans may well double down, but there is a way through this that we could go back to a program of really intensive verification of what Iran's up to. Now, but the track record of Iran sticking to any of that has been pretty damn poor over,
exactly.
I won't say 50 years, they didn't have it really much before the fall of the Shah. But at the end of the day, this is one of those moments in history that I cannot see a way in which, either with a bombing or no bombing campaign, Iran remains with a credible weaponizable nuclear program.
Do you think the Israelis aren't going to be prepared to stop until they have destroyed it? Are they prepared to allow diplomacy?
I think they're going to have to, because I do think they are very conscious of international disquiet about what's going on in Gaza, the long term. But there are very, very hardliners in Israel who've lived under the threat of an Iranian nuclear weapon for half a century now. So they see a window of opportunity. They see a very, very weakened Iran. They can operate with complete impunity.
So why should they stop?
That's what I mean. I think they will stop because the Americans will ultimately tell them to stop. But the Americans are unlikely to do that because they also see a window of opportunity now. And the only reason they'd stop is if Iran commits to a genuine, verifiable dismantlement of their nuclear program. Those are the only circumstances. Because we do need to worry, as my old friend David Petraeus used to say, tell me how this ends. Because if we do bomb, if a regime collapses, even if that's not the declared political intent, we're left with a whole set of consequential problems. But I would say at the end of this, we will not have Iran with a weaponizable nuclear capability. I think that is the key message that's going to come out. Now that Iran, you may want to negotiate this, but you may want to offer this. It means we stop the bombing, but we are not playing cat and mouse again as we have done for the last decades.
Okay.
Does the end of the nuclear program come with the end of the current Iranian regime?
It could well do. It could well do, and that would give us another set of problems. You know, only 2/3 of the Iranian population, of 92 million, as Ted Cruz now knows, are Iranians. The Azeris might break. The Baloch kicking off down in the south. There's a big Arab population there. And there's an awful lot, and I'm sure you've reported on it many times, there's an awful lot of discontent with the economic record of the current regime and its suppression of human rights. So it's extraordinary how history teaches how remarkably fragile some of these seemingly very powerful regimes can be if they suddenly lose the capacity to kill their own people.
So there's a conversation, though, that in that scenario, the IRGC has someone ready to take control and standing in the wings. Is that a fair assessment?
It could be. It could be. And again, you know, we saw Libya. I think we're very scarred by Libya. We're very scarred by our occupation of Iraq. I don't think that's going to enter, frankly, into the determination of the Israelis, but it will certainly enter into the determination of Trump. And his senior generals around him were all scarred by the experiences of Iraq and Afghanistan. So what we do not want to do is solve one problem and then generate huge consequential problems for the region. And our Gulf allies will be looking very carefully at this, about what the consequences of having a regime failure on the far side of the Arabian Gulf would lead to.
You referenced initially Iraq and Afghanistan. Are we headed towards boots on the ground, not just from the United States, but the UK, other European allies?
No. And when people say, do I think Britain will fall in behind the Americans, I say yes. There are ways of falling in behind. Diplomatic, political, logistical, intelligence, all the sort of deep infrastructure relationships we have. I don't necessarily see us joining in a bombing campaign. I don't think there's anything the Americans or the Israelis need from us. I do see us, if there was another spasm of attacks on Israel, perhaps supporting the defense of Israel. We've done that before. I think British military facilities, Chagos Islands, Diego Garcia, Cyprus would be at the disposal.
Yeah.
But there are a lot of things we can do that would be support. And I seriously do not think we see boots on the ground. I think if anybody wants that, I think all of us just want Iran not to be the menace and parasite it's been for the last 50 years in the region, and certainly not have a weaponizable nuclear capability.
Mr. Simon, if the bunker-busting bomb is launched from Diego Garcia, and that's a joint UK-US base, doesn't that pull the UK into the conflict inadvertently?
Oh, it does, absolutely. But we're in it already, to be honest with you. We have been defending against missile strikes in the Red Sea. We have been defending against some of the missile strikes on Israel earlier on. We're not as exposed as the Americans in terms of numbers, but we've got air assets, we've got soldiers on the ground, we've got naval assets in the Gulf. So and we're members of the P5, and we're NATO leader. So the idea that we could be a spectator in this, to my mind, is fanciful. However much pressure the Prime Minister is going to feel upon him. Hence why it's important that Lamy goes out there, demonstrate that the Iranians are completely obdurate about this nuclear program.
But isn't it the case that under the Chagos deal, as Labour has negotiated it, that
hasn't been signed yet?
Well, we would have to let Mauritius know that there's going to be a strike if the US is going down that route, and Mauritius is getting friendly with Iran, so doesn't that put the UK troops there in more danger? Doesn't that show that the deal itself has undermined safety?
I'm not a supporter of the deal. It probably comes through loud and clear. I don't think we should be doing this deal. I think it's been done on the basis of completely fatuous sort of argumentation. But the reality is, the Americans will have every right to use it. We may, in the position where we have to inform the Mauritians. I don't think we quite do yet. But we are very exposed. But that's the nature of Britain. That's why we're so different from many other countries. We're a global nation with global responsibilities, with global reach, with strong allies, and we are not a country that can, to my mind, in our DNA, step back from these big issues. And I think on this one, the Iran issue is one of those, another pivotal moment in the history of the Middle East. But there is opportunity in among the danger.
Donald Trump has said 2 weeks. We'll make a decision in 2 weeks. Take us behind the scenes. If you were planning an attack, if you were thinking of exposing your forces, what's going on right now in terms of the preparedness, the readiness? How ready are we to make a decision? How ready is the United States to make a decision? You're not in the room, but these things can happen quickly, right? It feels like we're dealing with a very sort of arbitrary time frame this morning in terms of, I'll make a decision in 2 weeks.
Well, it is a slight nature of the new Trump administration, but we did have 4 years to get used to it under Trump 45. And it is, I think it's very unsettling for policymakers. We're used to options being put on the table, discussions, courses of action. This is one where it's not an argument.
Would you take him at his word that it's within the next 2 weeks he'll make a decision?
Yeah, I do, actually. I feel we've got a certain amount of time for negotiation. I don't think Donald Trump would be necessarily tied by that. I think there are hawks in the American administration. Equally, I think there are people, given a sort of isolationist MAGA baseline, memories of Iraq, do not wish to get drawn into a never-ending war. But I think the options are on the table. But as I say, I think at the heart of it is the opportunity for Iran to step back. Now, the question then is, do you simply go to take out the nuclear facility in Fordow, Natanz, we understand has been badly hit already, or do you actively attempt to overthrow the regime and say that's it? But I think that would be things that people would have difficulty with. And then you're slightly dancing to an Israeli agenda, and we want to be very clear that there are conflicting agendas. At the heart of it is a problem set that's quite quantifiable, the Iranian nuclear capability and its potential to weaponize. And that, I think, will be gone in one form or another as a result of the current
Well, I mean, as well as your military experience, you've also been a historian chronicling the clashes of Christendom and the Caliphate. I mean, I just wonder what lessons we should be drawing from history at this point as we question what Donald Trump and what the UK should be doing in the next 2 weeks.
I mean, I think this is the interesting thing about American involvement in the Middle East is sometimes, and nobody could be a greater transatlanticist than myself, it's a deeply historical area where if you don't make it your business to understand the culture, the history, religion, confessional divide, you're talking about countries in the Middle East, which is such a sort of rather lazy expression, with deep, deep histories. You know, the Turks with the Ottomans, the Egyptians with the pharaohs, the Iraq with the Babylon, Nineveh, clearly Damascus, Baghdad, and then the Iranians, who are deeply proud people with an extraordinary depth of civilizational awareness. And so we've got to be careful about dealing as if they're sort of countries like on the game of risk. You know, they're geographical and they're very historical. And understanding the difference between Iranians, Turks and Arabs and Egyptians, understanding the difference between Sunni and Shia, understanding that actually Iran is quite divided, Azeris, Baloch, Arabs as well. It's really important. We didn't do our homework for Iraq, and we paid the consequences of not doing that homework.
Very much the point that was made to Ted Cruz, you might say.
Well, Britain's a historical country. We've been, in that region for a long time, for better or worse. And I think because we're a historical nation, we find these differences and these historical antecedents deeply interesting. I think it's in our blood. I'm a history graduate by nature, and hence, the two books on the Middle East. But I think it's important, and there are all sorts of mistakes we made in the occupation of Iraq that I think we could have avoided. And interestingly, we are reaching out to the Iranians. We are reminding them of their great imperial background, their great ethnic background, their civilizational influence, and almost saying, you have a totally unworthy regime in the Ayatollahs for a nation as great as yours. And I think trying to thread through the needle at the moment to try and end up with that, as I say, tackling that very quantifiable problem, the nuclear thing, and keeping Iran without feeling humiliated or even just becoming a failed state, a la Libya.
Certainly a tricky line to draw. Simon Mayo, former UK defensive advisor for the Middle East and author of the book The House of the War, joining us this morning with his analysis. We'll be back with more. Stick with us. This is Bloomberg.
Another art museum called the Guggenheim. Now, Louvre's big enough. Why do you need a Guggenheim as well, right next door?
I think it's a great question. I think the beautiful thing about the UAE and Abu Dhabi is we live with over 200 nationalities. And in doing so, they have become a part of the country's and the city's fabric. And we need to celebrate that. So we need to celebrate everybody's identity, everybody's background, everybody's heritage, everybody's history. And what a beautiful way in doing so in these beautiful institutions. These museums are educational institutions and they're community institutions. So we wanted to curate really a story where you come to Saadiyat Cultural District and you, if you allow me to curate the story, you start off at the Natural History Museum. And at the Natural History Museum, you get a glimpse and you get an understanding of how we came to be, how our Earth came to be, how our universe came to be, from a scientific perspective. Once you leave the Natural History Museum, you go to our National Museum, the Sheikh Zayed National Museum. There, you understand the history of this great land, not just the history of the country, but the people of this land that have been a part of this land for over 300,000 years. You get a glimpse of what the past and the present and the future looks like here in the UAE. From there, you maneuver yourself to the Louvre Abu Dhabi, which is a beautiful universal museum. It is universal in its thematic approach. So there, you basically see a part of you on an equal pedestal with the entire world.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Bloomberg has learned that SoftBank is looking to team up with TSMC in what could be its biggest ever bet. The plan involves a $1 trillion industrial complex in Arizona to build robots and AI. SoftBank founder Masayoshi Son envisions a version of the vast manufacturing hub in China's Shenzhen that would return the high-tech manufacturing back to the United States. Bloomberg's Tom McKenzie is all over this story. We were talking earlier in the show about the realistic possibility of this. We're talking about $1 trillion worth of investment out of SoftBank. Put that into context for us.
Well, this story poses a lot of questions to your point. What you can't do is fault Masayoshi Son of SoftBank for his ambition, and it is absolutely gigantic, isn't it? $1 trillion, and he wants to recreate a kind of Shenzhen in the US, potentially alongside TSMC, of course, the foundry, and of course Samsung as well. We haven't heard comments from them. The money that would be involved, where would that come from? Private capital. SoftBank doesn't have the capital clearly to fund that. Portfolio companies. Part of the reason he wants to do this is to ensure that there is the supply chain for his own portfolio companies and make sure that they are lifted and elevated on this front. You would imagine that OpenAI would have a piece to play, as would ARM as well, that is moving closer into data centers in terms of their CPUs aligning with AI accelerators. It's an absolutely gigantic plan at a time, of course, when TSMC already has its investment commitments in Arizona in terms of building out a foundry there. So lots of questions that go with this, but I think it's a reminder, number one, of trying to hit the sweet spots when it comes to President Trump's ambitions to build out that manufacturing in the US. And you would have thought that at least top line he would welcome this. And we know that there have been conversations between Massa and Howard Lutnick of the Commerce Secretary, of course, in the US. So it hits that and it ticks that box in terms of Trump's ambitions. But we do need to find out where the capital is coming from, where the spending is coming from, and whether indeed they can get the talent and the engineers not just to build all these projects, but actually to operate them as well, which has been a constraint and a bottleneck in the US.
Yeah, and there's also a massive debate about whether this is exactly the right way to spend that money. It's a huge amount of money to throw at the problem, right? And clearly, Masayoshi Son, very observant of his own legacy here, but is this really the way to do what he wants to achieve?
Well, it's a reminder that this is we're still in this environment where the infrastructure of AI is front and center for these executives. You have the spending plans in terms of the sovereign data push that's really being led by OpenAI and SoftBank in the UAE, and you had Trump announcements around that, hundreds of billions of dollars. You've had hundreds of billions committed already to data centers in the US. You've had a trickle in terms of what's been committed in Europe and the UK. The focus on making sure the infrastructure is in place so you can kind of drive down costs and make sure that you can diffuse this technology as widely and broadly as possible still seems to be front and center.
Sounds almost as if you know what you're talking about. You should have a tech show, which I think would be something that would be amazing.
It would, wouldn't it, Guy? Funny you mention that.
We had one today.
We do. So we've launched the Bloomberg European Tech Show, launched today. And what the idea is that we focus either on a theme or we give a platform to a really big name within the world of tech. We want to explore what is happening in terms of European technology. The idea that Europe cannot innovate is bonkers. We can. There's some amazing entrepreneurs out there. There are serious questions about capital. There are serious questions about scaling. There are serious questions about how you exit. And there are serious questions about talent as well. We are answering those questions in terms of talent. I think there are 4 key things that Europe is sitting pivotally at this moment that they have to address. And I think we look back in a decade's time, we'll say, can and did Europe address these? 1 on energy, 1 on AI, 1 on defense, and 1 on, what was the other one? There's 4, defense, energy, AI, and what is happening in terms of the healthcare sector in which Europe leads and how you can integrate AI into that. So I think in terms of all these key areas, if we look back in 10 years, did we answer the question on them? Now, I sat down with a number of CEOs for this new tech show, including the executive chief operating officer, so CEOs, and the COO of OpenAI, Brad Lightcap, and I asked him about that gap between Europe, the UK, and China and the US when it comes to AI. He said, actually, that gap is not as wide as many might think. Take a listen.
Really do feel just an incredible amount of enthusiasm and excitement from Europe. That's why we're here. And I don't expect that to abate at any point. So, you know, in some sense, these things are kind of self-deterministic, right? It's the appetite that businesses have to want to drive transformation. Yeah. It's the appetite that governments have to want to build infrastructure. It's the appetite that people have to want to really use these tools to do new things, that artists have to be able to use these tools to do new things. We see that just as much in Europe as we see it in the United States.
If there was one thing that you would prescribe that governments could do to help close what is, many would say, is still a gap, what would it be in Europe?
I think it's access, right? You've got to make sure people are using the best tools. And one of the surprising things that we've seen is we tended to think that there would be at some point where we just continue to build better and better models, but people kind of don't benefit you know, proportionally to how much the model has improved between generations. And that's not true. What we see in practice is every time we make the model better, people find new ways to get value out of it. They find new things to do with it. Businesses find new use cases to deploy it into. And so as we continue to push the frontier, we just think it's absolutely critical that people have access to the best tools.
Does it matter that Europe only has one large language model company, Mistral? Does that keep us constrained?
I don't think so. I think that people will ultimately gravitate to where the best models are, whether that's with OpenAI or another company. And it's on OpenAI to make sure that the models that we build serve the needs of the people that want to use them. I think that's true of any other company building models.
Okay, where do you think Europe can accrue the most value in AI?
Ultimately, look, I think the application layer is going to be the most interesting, right? It's where you actually come into contact with reality, and these models have to perform.
Okay, that's the Chief Operating Officer of OpenAI speaking to me as part of the newly launched Bloomberg Tech Europe show, which we hope gives you a comprehensive deep dive in the first episode, which you can watch, by the way, on YouTube, on the Bloomberg Tech website on YouTube. A comprehensive look in terms of where Europe and the UK sit in terms of the AI race. You come away with that with some really clear guidance from some of the investors, some of the key names in that space in terms of what the catch-up is and where the value aligns and where some of the investment opportunities are as well.
Cool. We'll look forward to more of it. What's it, once a month?
Once a month.
Like, we need to make it more than once a month. If Europe's going to be serious about tech, that should definitely be once a week. We'll see what happens on that front. I'm stirring the pot. Let's carry on the conversation and talk about what's coming up this weekend. If you want to head for the henge, it is the summer solstice. A very nice long weekend coming. We've also got, I understand, Dua Lipa playing in London. Critty's going. Lizzie only knows one song. Tom, I'm sure, knows the entire repertoire. So over to you.
Dua Lipa, I think, is one of those artists that everyone says they only know one song, and then you go to the concert, you're kind of bopping along, and you're like, wait, I do know this. This is great.
She smashed it at Glastonbury last year.
Thank you.
Don't act like you went. Look, I'm going to Ascot this weekend. The two dads are mowing the lawn. I think we
need to see the hat. We need to
the fun is on this side of the table, I think.
I'm mowing the lawn as well. That's where the fun is. That's what we're talking about. The Pulse is up next. Look at the weather. This is Bloomberg.
flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that none of the guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The White House says President Trump will decide within 2 weeks whether the US will join Israel in launching strikes against Iran. Meanwhile, European foreign ministers are due to hold talks with their Iranian counterpart today. He tells state TV that Iran will not negotiate until Israel's aggression stops. Plus, SoftBank founder Masayoshi Son eyes a $1 trillion industrial complex in Arizona. We bring you the details of our Bloomberg Scoop. Let's check in on the markets. Risk on across the equity markets. At least there is relief percolating through the stock markets on a suggestion from President Trump that there is now a 2-week window for diplomacy when it comes to Iran. European futures, though, pointing a little softer by 0.1% as European stocks look to reopen, of course, after that National Day holiday yesterday. Pairing some of the heavier losses, it's worth noting when it comes to US futures. Euro dollar in focus. The dollar is a little softer. Euro getting a lift at 1.15, up 0.2%. Brent remains in focus, of course. Oil prices volatile on the geopolitics in the Middle East. Currently, Brent down 2% in the session at $77 a barrel. And gold also giving up some of the gains, down 0.6% for that haven at $3,348 per troy ounce. Let's flip the board and have a look at how the European equity session is shaping up across Europe, the region, of course. FTSE 100 currently up 0.5%, a decent session so far in the UK, but a brighter picture even in France and in Germany as well. You can see the DAX up a full 1%. Over in Spain, the IBEX closing in on that gain as well. So a brighter picture when it comes to the equity markets on this relief. And of course, you have the central bank action of the week passed and done as well. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm not Francine Lacqua, I'm Tom McKenzie stepping in for Fran here in London, of course. Now, Donald Trump has given himself 2 weeks to decide whether or not to strike Iran, saying he wants to give diplomacy a chance. It is a week since Israel began its attacks overnight. An inactive nuclear reactor near the town of Arak was hit. European and Iranian diplomats are due to meet in Geneva shortly, while the US president will attend a National Security Council meeting later.
I have a message directly from the president, and I quote, "Based on the fact that there's a substantial chance of negotiations that may or may not take place with Iran in the near future, I will make my decision whether or not to go within the next 2 weeks."
Okay, let's bring in Bloomberg's Jemana Basecci joining us from the region. So, Jemana, Trump remains undecided. There is a 2-week window, it seems, for diplomacy, and yet hostilities continue on the ground on both sides.
Yeah, well, what we are getting today is the U.S. administration, President Trump, is stepping away from the brink. Remember, 24 hours ago, it seemed as though military intervention from the U.S. perspective was nigh, that it was going to happen in a matter of days. But now he's opened the window up to diplomacy, to those negotiations. And also the press secretary, Caroline Leavitt, adding in those comments that if there's a chance for diplomacy, the president is always going to grab it. On that front, we know that the Iranian foreign minister will be meeting with his counterparts in Geneva. He's actually just landed now in Switzerland a short while ago. He'll be meeting with the UK, German, and French foreign ministers. But he also said in comments just a short while ago that they're not willing to engage in discussions so long as Israel keeps on with their attacks. So it will be interesting to see whether a window can be carved out for the Iranians to start speaking directly to the U.S. in the absence of some sort of halting or at least slowdown in intensity on the tit-for-tat strikes and those hostilities that you mentioned, Tom, because there really is no signs of abating. And actually, after an Iranian missile managed to intercept Israel's air defense systems yesterday, causing significant amount of damage in a hospital in southern Israel, the Israel response has been very vitriolic. The defense minister is saying that there is no room for the Ayatollah to exist, that they will strike back hard. And therefore, in the next couple of days, we're expecting quite a significant response from Israel on Iran. The attacks on the centrifuges and those nuclear sites continue as they continue also to try to eliminate Iran's ballistic missile ability as well. They say that they've taken out about 2/3 of those missile launchers. That's per the Israeli military.
Yeah, and of course Israel has targeted hospitals in Gaza multiple times, though it says, of course, that it's been targeting infrastructure of Hamas during those operations as well. In terms of Iran's proxies and their allies in the regions, the groups for which they fund and support, what can we expect in terms of the response? They've been relatively quiet so far, Jemana.
I was just checking one of the Lebanese news channels, and the Speaker of the House, Nabi Habari, he's a man who's been in Lebanese politics for a very long time, quite closely allied politically to Hezbollah, just said, I am 200% sure that Hezbollah will not get involved in this war. Iran doesn't need them. Now, that's one way to frame it, but of course, Hezbollah are operating in a much diminished capacity in Lebanon since the war that was that they engaged with Israel towards the end of last year. Their own arsenal has been debilitated. They've lost about 70% of their capacity. Again, their command structure has been decimated, their leadership structure, they have less political clout within the country, and also the U.S. ambassador to Turkey and special envoy to Syria, Tom Barak, was in Lebanon yesterday, also sending a warning to Hezbollah, saying there will be grave consequences if they dare to get involved in this war. So a lot of pressure being applied there. Houthis have been quiet since the truce that was agreed with the U.S. about a month ago, but that doesn't mean things cannot intensify if the U.S. decides to intervene militarily. Of course, Hamas on the back foot as well, with the war in Gaza still going on. And then the final area to watch is what those Shiite militias in Iraq, the ones that are closely allied to Iran, Kataib, Hezbollah is their name, what they have to say. So far, they've been quiet, but they have also said that they would strike back at U.S. assets should the U.S. be seen to getting involved militarily. So there's a lot at stake, but perhaps the proxies are not really in the mindset or don't have the capacity to fight back. But if the U.S. were to get involved, then maybe we'd see a different picture, particularly from Iraq.
Okay, Bloomberg Horizons Middle East and Africa, Jemana Basecci, of course, with that update in terms of the conflict that continues between Iran and Israel. Meanwhile, Iran's foreign minister is set to meet counterparts from around Europe in Geneva today. Let's hear more from Bloomberg's Oliver Crook, who's watching what is happening in terms of the international diplomacy on this question, on this conflict. Ollie, what do we expect to come out of the meetings? What are you going to be watching for in terms of the mood music, in terms of the language, and whether or not the needle can be moved in terms of getting closer to a diplomatic solution?
So let's set up who this conversation is with. It's going to be the Iranian foreign minister who's arriving in Geneva to speak with his counterparts from France, from the United Kingdom, also from Germany, as well as the EU High Representative Kaja Kallas, in order to begin to have sort of diplomatic discussions. It's the first time that they've actually met in person over the last week. They spoke a little bit earlier in the week on Monday. They didn't get any sort of high breakthrough there, but that was, of course, at the height of the bombing campaign and the sort of confusion about what would the sort of next steps would be. We're now in a position, as we've heard from the President of the United States, Donald Trump, there's been given a little bit of runway for diplomacy, and this is one of the avenues where you may be getting that diplomacy. Just about an hour ago, we got a couple of headlines from the Iranian foreign minister that speaking to state TV, saying that basically they do not want to negotiate with the United States while the Israelis are striking, and he's saying that instead they will only hold the nuclear talks in the EU meeting. So that is potentially where that conversation can begin to happen. The best case scenario that you could get out of this meeting is you begin to get a sort of framework about what monitoring of the nuclear program in Iran could look like going forward, something that could potentially be shuttled over to the United States and the U.S. administration to have a look at and begin to have that sort of dialogue about a kind of day afterwards in terms of the future of monitoring those the nuclear weapons program within Iran. There's also potentially discussions about drawing down ballistic stockpiles and sort of reducing them. These are going to be parts of the conversation. Of course, the issue, Tom, as we've discussed many times in the sort of era of Trump, is that the Europeans don't have a huge amount of leverage in the region, in the Middle East, certainly not on Israel, not so much on Iran. There's only so much sort of diplomatic clout that they have, and they only have so much diplomatic clout with the United States. So they can come, they can bring a framework, potentially that could be helpful to the Trump administration in determining next steps, but I would say that we wouldn't be expecting a huge breakthrough that would be led by the Europeans. Of course, if there's going to be a breakthrough, Donald Trump is going to want to claim the credit with his administration.
Yeah, so that brings me on to my next question, Ollie, which is really how closely Europe and the US are coordinating on this issue. Is there much daylight between them when it comes to how to address the diplomacy?
So what's interesting is you had David Lammy in the United States yesterday. He met with Marco Rubio. He met with Steve Witkoff, we understand, and they had a sort of conversation. And again, what we heard from David Lammy, which is what you'd hear probably from a diplomat, is that now there is room for sort of diplomatic exchange. The question of whether or not the Europeans are going to be able to exert any sort of influence on the United States, I think is fairly diminished, right? But there is a potential, there is a conversation in which, they could get some information from the Iranians. They could get a sort of framework. They could pass that on to the people that are close to Trump. And if they find that valid, it gets, again, it's in that chain of command one step closer to Trump and potentially could have some influence over the decision. Where you actually have the sort of the Europeans and the United States aligned is on this issue of Iran. Where you have sort of distinction and sort of difference is on the question of Gaza. But broadly speaking, the Europeans and the Americans are aligned on the issue of Iran. So it's not going to be an issue in which the U.S. is going to be hypersensitive or very sort of wary of what the Europeans want. You will have seen, Tom, that the G7 overall, basically nobody has been critical of Israel apart from Japan, and all of the Western Europeans really do blame the Iranians for this, for them sort of bringing this on themselves, seeing that they are actually the main actors of destabilization. And though the Europeans would like to see de-escalation, they've not been at all really critical of Israel and sort of its actions over the last week.
Okay, Bloomberg's Oliver Crook, thank you very much indeed. Watching the events in Geneva as, of course, that diplomatic effort from the European side continues, and we'll continue to monitor lines as foreign ministers, of course, meet in Switzerland. Now, European stocks are higher this morning, as we've noted, with oil prices easing. We'll see how long that lasts after the White House dialed back speculation that the US was on the verge of launching strikes on Iran. With me now for a deeper dive in terms of the economic impacts of the geopolitics and the central bank action is Isabel Mateos Ilago, Chief Economist at BNP Paribas. Isabel, thank you for waiting patiently in the wings. I want to start with the central bank action because we can't unpick what's happening in terms of the central bank thinking and what's happening in terms of inflation and oil prices out of the Middle East. With the Fed, and we'll start there in terms of expectations, the guidance, the forecasts are still there for two cuts in 2025. We know the FOMC are split on this question when we look at the dot plots. You don't think they get to two cuts in 2025. How much of that is down to the inflation story versus the growth story in the US?
Good morning, Tom. So you call it a forecast. I would say this is the median dot, and explicitly not a forecast. And I think Chair Powell was very careful and specific in describing the dot plots to tell markets and other watchers, don't put too much currency into it. And as you said, the FOMC is split down the middle. And if anything, we've seen a move of the dots towards no cuts between now and the end of the year. And I think this just reflects, I should say, pretty independently of the developments in the Middle East right now. That wasn't much of an issue of emphasis. The main worry in terms of inflationary pressures in the U.S. is really from the tariffs, which until now we haven't seen much, if any, pass through into domestic prices. But the Fed expectation is that we're going to see more of that pass through manifest itself in prices from really this month, and we agree with that, and therefore we agree with those dots that believe that it's going to be difficult to ease monetary policy in the U.S. by the end of the year. But against that, it's really interesting that in Europe we saw just yesterday 3 central banks deciding to cut, and a pretty dovish hold from the Bank of England. And so it really illustrates how the U.S. in a way stands out from the rest of the G10 in facing a domestically generated inflationary shock, whereas the rest of the world, has to deal with this uncertainty from the Middle East, but apart from that is looking at their own inflation dynamics and are pretty relaxed about them.
And to be clear, tariffs is the key driver right now, and should be the clear focus versus what's happening in the oil markets when it comes to the inflation question.
That's right.
In terms of, so we get no cuts from the Fed in 2025 is your forecast, okay? So that's your forecast. No cuts in 2025, no cuts for the year from the Fed. Does that mean you get more action from the Fed in 2026? Is there a catch-up there as the economy softens and as you get a new Fed chair?
Potentially. I mean, basically, there should be 2 drivers. So there could be 2 drivers to that. One is that, if the Fed has remained credible and the economy progresses as they expect, and we expect, which is to say a mild increase in the unemployment rate, then we shouldn't see any second-round effects. And so the one-off increase in prices from tariffs should be really one-off, and we should see a kind of spontaneous deceleration of inflation, which should allow and, in fact, ask for an easing of monetary policy. On top of that, if there were to be a more pronounced weakening of the economy, then the Fed would be in a position to cut very significantly. But I wouldn't call it a catch-up exactly.
How do we understand your view then that the dollar further weakens from here? More weakness for the dollar, and yet you've articulated that divergence between the Fed keeping rates on hold at relatively high levels, not historically, but in the last few years, versus some of their international counterparts.
Yeah, look, the dollar is determined by multiple influences, and it's been very clear since the start of the year in particular that U.S. interest rates don't seem to matter all that much anymore. And I think that's consistent with the broader narrative of reduced U.S. exceptionalism, global investors rebalancing their exposures from a very overweight U.S. to look...
Where are we in that story?
Well, we're at the very beginning. If you look at the tick data, which was published just last week, and reflects the April flows, it's the first time since January 2024 that U.S. non-residents, so rest of the world, have been net sellers of U.S. assets. Now, you can describe it as a glass half full or glass half empty, and a lot of people have said, we are not seeing a rush out of dollar or rush out of treasuries. That's true. But, April was a month where you had very significant shocks to the market, to sentiment, and what you didn't see is a rush into the dollar. You really didn't see that. In fact, you had the private sector selling off treasuries, you had both private and official sectors selling off T-bills, and you had the official sector selling U.S. equities and mortgages, right? And so this is not the sort of business as usual market moves that you would expect. So there's some very strong undercurrent there of portfolio rebalancing away from the U.S. It's very orderly, it's very slow, but it explains this downward pressure on the dollar despite the rate divergence.
And briefly then, does that mean euro gets more market share as a safe haven?
That will depend also on what happens on the euro side. There has to be assets to buy. There has to be a lot of developments of a structural nature for the euro to really become a credible, I wouldn't say an alternative, because it's not going to displace the dollar, but to be a credible competitor, let's put it that way. It's going to take time. It's going to be slow, and we want this to be slow because, frankly, we want it to be orderly.
Yeah. Okay. So the euro as a challenger in a gradual fashion, as you expect further weakness for the US dollar, and just at the start of the journey in terms of reassessing how much exposure international investors want to have to US assets. Thank you very much indeed for the analysis across central banks and the geopolitics as well. Isabel Matias Ilago from BNP Paribas, chief economist. Coming up, we're going to ask if a months-long rally in emerging market assets will continue as geopolitical tensions escalate. Partly that is down to those flows, of course, out of the US as well, into EM assets. Can that continue? And which parts of the emerging market assets class do you want to be looking at to get exposure? That discussion is up next. This is Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg. At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome back. Happy Friday. Emerging market stocks slid this week as escalating tensions in the Middle East dim risk appetite. But looking further back, EM assets have had a pretty decent run this year. Investors are betting the rally has further to go. We're joined now by Alicia Berardi, head of emerging markets, or emerging macro strategy, I should say, at the Amundi Investment Institute, but with a keen eye, of course, on emerging markets. Alicia, thank you very much for joining us in the studio. Let's talk about that run-up then, prior to this week, in terms of EM assets. Does it have further to run, or has it now been derailed by the uncertainty out of the Middle East?
Yeah. So emerging markets have been supported by quite good fundamentals. Starting from the growth premium, the emerging markets growth premium have been improving vis-a-vis the developed markets, right? And especially in certain areas of emerging markets, such as Asia, the growth premium remains quite vibrant. We have been upgrading growth in Taiwan, in India, so growth premium in Asia is actually moving in a very good direction. Then, on top of that, we have a sound policy mix in emerging markets. So, monetary policy, fiscal policy. The policymakers in emerging markets have been doing a long journey to improve and to make more orthodox policies, and that is now reflecting even in reliability of these policymakers and then markets performance as well.
This is an inverse relationship now, because the emerging market policymakers seem to be taking the mantle from the US, that source traditionally of stability and smart policy making. But now we have concerns about the deficit blowing out, about the debt load in the US, about a tax and spending the bill that could add $3 to $4 trillion onto the debt load of the US. Is that inversion reflected in flows?
For sure is reflected in markets volatility. When we look the risk-adjusted returns on the fixed income side for US fixed income and emerging market fixed income, when we adjust the returns for volatility, indeed emerging markets are performing better. The volatility is higher for developed markets, and that probably reflects what you are saying in terms of perception of policy making.
Do you agree? Our former guest, BNP Paribas chief economist, Isabel, saying that we are just at the beginning of this story in terms of fund flows and adjusting out of the US into other parts of the global assets story. Are we just at the beginning? Is that the right way to characterize it?
Yeah, I totally agree with that. We are just at the beginning, but this is a trend that has started since a while. It's not a new trend. But still, in the markets, in the flows, we have seen more appetite for emerging markets assets since the beginning of the year on the equity side, on the FX side, currency. Emerging markets currency have been performing quite well. But this is, let's say, a pickup in a more structural trend that is only at the beginning, I would say.
Do you have to carve out, right now, given the uncertainty in the Middle East and higher oil prices, Brent is down 2% in the session today. We're at $77, so not a painful level for oil in historical standards. But nonetheless, given the uncertainty, do you have to carve out the oil importers from your EM basket?
Still, at this level, as you said, this is not a war zone level, right? Still, it's a very decent level for both exporters and importers. But of course, with the Middle East events, what the investors are looking at is to what level the oil can go. And then you start to distinguish between exporters and importers, not only in emerging markets, even in developed markets, right? The oil price scenario that we have in mind, considering that demand is quite subdued, growth is quite subdued across the world. And we know that supply has been adapted by the OPEC more recently with increasing the supply. So we still have a fair value of the WTI between 60 and 65. That is lower with what we have today. But we see this risk as temporary for the time being. And because of these fundamentals, oil should return to the levels that we have in mind as fundamentals for value.
Tariffs have been imposed on a lot of EM countries, and they've yet to secure deals with President Trump. We know that the clock is ticking towards July the 9th as well, and that self-imposed deadline by the US president. You say, despite that, India, and I'm quoting from your notes to us, India is the steadfast winner in global supply chain shifts. India has not yet struck a deal with the US, and you are touting India as a clear winner.
Yeah, it's true. We don't have still news about the deal, but we know that this deal will happen in stages, as it normally will be, because you can't do really a very comprehensive deal in such a short amount of time, right? So we'll probably see this deal coming out in stages. But I think, or better, this is what we have been told by the US policymakers, is that in reality, for countries that are engaging with the US administration in making a deal, the tariffs level is not going to change on the 9th of July.
But is this also this is a rerouting story for India in terms of global trade?
Yes, but Indian growth is mainly driven by domestic factors.
Okay.
So Indian growth is driven by a very vibrant capex, and actually in Q1 and with the fiscal data up to April, we have seen capex catching up. So last year, India was worried investors because the capex was actually lagging behind in terms of targets with the budget targets. But now, in the latest months released for the fiscal accounts, we have seen a strong catching up. So the story is returning. Capex is back. India momentum is domestically driven, is actually gaining track.
Okay, Indian momentum is there on the capex story. Thank you very much indeed for the analysis, the lens of EM space and the flows out of the US in terms of some of those asset classes benefiting as well. Alessia Berardi, head of emerging macro, I've done it again, emerging macro strategy at Amundi Investment Institute. Plenty more coming up. Stay with us. This is Bloomberg.
Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
Now we're playing. Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5. Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. Welcome to The Pulse. I'm Tom McKenzie in London, and these are your top stories. Happy Friday, everyone. The White House says President Trump will decide within 2 weeks whether the U.S. will join Israel in launching strikes against Iran. Meanwhile, European foreign ministers are due to hold talks with their Iranian counterpart today. He tells State TV that Iran will not negotiate until Israel's aggression stops. Plus, SoftBank founder Masayoshi Son eyes a $1 trillion industrial complex in Arizona. We bring you details of our Bloomberg scoop. Let's return to our top story this morning. Donald Trump, of course, giving himself 2 weeks to decide whether or not to strike Iran, saying he wants to give diplomacy a chance. There have been reports that Trump vetoed an Israeli plan to kill Iran's supreme leader. That was earlier in the week, of course, and Gulf states are assessing the possibility of Iran's regime falling. Bloomberg spoke with Egypt's former foreign minister, Nabil Fahmy.
I don't know where regime change has actually worked before, and I would argue that even when it happened before, in Iran itself, by America over 50 years ago, the ultimate result was the regime went more towards an anti-American perspective than a positive one. So let regime change be an expression of domestic politics rather than that of foreign politics.
For more analysis, let's bring in Elizabeth Monnier now, assistant professor at the University of Cambridge with deep expertise on this region. Elizabeth, good morning and thank you for taking the time. Are we in a position right now where diplomacy is getting closer to solving and ending this conflict, given the 2 weeks that it seems the US president is now giving himself?
Good morning. Yes, I think the whole world has taken a deep breath of relief overnight. This is good news. It's the most positive outcome that we could have seen after the events of the previous week. This does seem to suggest that there is a chance for diplomacy. It's still at the very early stages, and there is still a lot of complications, clearly. The signals coming out of Iran are that defiance will continue, and this is very much in keeping with Iranian rhetoric and speech, and the importance that they see in holding on to their deterrent So it's very clear that they have to balance the need to really find a diplomatic solution with maintaining credibility, with maintaining their deterrent, and also preventing any possibility of domestic unrest as well. So I think this 2 weeks, particularly after this speech of the last couple of days, that we might be seeing US intervention within 48 hours is certainly a positive step.
And clearly the US have ramped up the rhetorical pressure in recent days, and they put assets in the region to follow through on that. So it's not just the rhetoric. They have the assets now in the region to carry out a strike should they choose to do so. Given the complexities domestically and internationally for Iran, how far do you think they could go, the Iranian leadership, in terms of giving up their nuclear program to get a deal with the US?
Again, it's a very difficult balance for Iran. There's a lot of narratives coming out, particularly from the region, that this will push Iran further towards the stance where they feel they need to have this nuclear weapon as a deterrent, now that the balance of power has changed so dramatically in favor of Israel in the past couple of years, really. So it's very difficult to see how these negotiations will go. Clearly, Trump's position is very much it's no nuclear program at all. How this will pan out is interesting to see. And I think the rhetoric and the move of assets to the Middle East is very much about pressuring Iran and pushing Iran into a corner. But there is a question whether this will, which way Iran will go. Will it back down, or will it just go to the other extreme? I think it's going to be one extreme or the other. The other problem with starting with these kind of threats is that very much empowers those in Iran and across the region who see a nuclear weapon as a necessity, as a deterrent, and particularly with this new belligerent Israel sort of in the region, that this could actually, very much backfire. And given the history of complicated relations between Iran and the US, going back, as the previous speaker referred to, the coup engineered by the CIA at MI6 in 1953, this coup brought back to power the Shah, empowered by US. This is not history for Iranians. This is very much in their strategic thinking. It's very much at the core of suspicions and lack of trust towards the US. And so going into negotiations with even greater broken trust, it's going to make a diplomatic solution very difficult, but it's a necessity. And I think it will be a necessity for Iran as well.
So that historical prism is worth thinking about as we consider what can be achieved with diplomacy. Elizabeth, there is an argument being made by the hawks around President Trump. I'm thinking of Lindsey Graham specifically, who's been pushing for the US to involve itself more directly in this conflict with a strike on the nuclear facilities of Iran. There's a narrative that this can be done pretty efficiently, pretty cleanly with bunker buster bombs. You're in, you're out, you take out the nuclear facilities, the question is solved once and for all, and we're done. Is it as simple as that?
I don't think anything is as simple as that, unfortunately. For a start, there's splits within Trump's camp. I mean, we've clearly seen in recent days that the support is not fully there behind this idea of a single strike, taking out the nuclear program. So, that position would weaken Trump anyway. It would complicate things in the region very much. It's no guarantee that it would take out this facility. And I think that kind of strike, the legality also is in question. The IAEA has questioned or pointed out that attacking peaceful installations is a violation of international law. So it brings in many, many complicated questions. There's also the issue of potential radiation leaking from these sites after these attacks, which then affects the region and America's partners in the region. So it's definitely not that simple, unfortunately. And again, that kind of strike will make Iran and other countries in the region sit up and take notice that, if we don't have a bomb, then we can actually, be subjected to such an attack at any time.
A lot of the analysts that we've spoken to in the last week have suggested that the Iranian regime is at its weakest point that it's been in decades, arguably ever, for the current regime. If there is quote unquote regime change, if the regime collapses either internally or through international pressure, is there a framework? Is there a foundation in terms of other political leaders or parties that can either come back from exile or domestically fill the void? Is there an alternative leadership, essentially, for Iran?
I don't think so. Clearly not anyway. I mean, yes, I think it's true that Iran is at its weakest. It's lost, a lot of the deterrent was about its proxies in the region, particularly Hezbollah, which got spectacularly taken out by Israel. And now we're seeing that the missile program is perhaps not as strong as we suspected. So Iran is definitely weaker. In terms of opposition in the country, it's very unclear what opposition there might be. The supreme leader has been in power since 1989, has a very strong grip over all the institutions of government in the country. It's also difficult to tell how much domestic support there would be for regime change. Clearly, voices outside of the country in the West, the Iranian diaspora, for example, really look towards regime change. And this is something they aspire to. I've even seen comments from Reza Pahlavi, who is the son of the last Shah of Iran, has said that he would act as a caretaker figure. But we have precedents that show us the terrible consequences that come out of trying to change regimes in Iran, in the Middle East. I mentioned the 1953 example of the coup of Mossadegh, and that's really, contributed to the 1979 revolution and to where we are today. And then we have the more recent example of trying to change the regime in 2003 with the invasion of Iraq. And in that case, the Americans had a figure, an Iranian-American, Ahmed Shalabi, who they saw, as a potential transition leader. Again, this failed. I don't think there's anyone outside of the country that would have enough support across the country to really lead any kind of peaceful or even smooth transition. I think it would be extremely complicated. The power vacuum would be substantial, and the reverberations for Iran, for neighboring countries and globally would be devastating.
Elizabeth Monnier with some important context and analysis, Assistant Professor at the University of Cambridge. Thank you very much indeed. Well, on the oil complex now and how it relates to what's happening, of course, in terms of that war between Iran and Israel. Iran is racing to get its oil out into the world. It's a sign of the unusual logistical steps that Tehran is undertaking as the US, of course, mulls joining Israel in bombing the Persian Gulf state, though we do apparently have this 2-week window of diplomacy. Let's bring in Bloomberg's European oil team leader, James Heron, for the details. And the team, James, you and the team have been doing a deep dive looking at satellite images in terms of what Iran is doing with its oil supplies. What are we finding out?
Well, what we're seeing is, as you said, they're trying to rush as much crude out of the country onto global markets as they can. We're seeing a lot of oil being put into storage tanks, their main export terminal. We're seeing a lot of tanker activity. And this is all geared around the world's biggest oil choke point, the Strait of Hormuz, because obviously if the war spills over into drawing in Gulf infrastructure about oil tankers, then Iran will have as much trouble getting its oil to market as the rest of the countries will. So, and as you say, you talked about the weakness of the country. Oil exports are really Iran's economic lifeblood, so they want to be sure that they can get as much of this product to sell out onto the world as they can.
Is this a suggestion? I mean, maybe this is a geopolitical question rather than an oil markets question, but this is a suggestion that they're trying to shift this oil and then they'll look to close or block the Straits of Hormuz. Is that how we should read it? I mean, how are we thinking about the Straits of Hormuz as a risk and some of the analyst pricing around where oil goes in that scenario? The volatility around oil has been acute.
Yeah, that is always the big fear of any conflict in the Middle East, particularly one involving Iran. Given the relative weakness we've seen in Iran, there's questions about whether it could really block the Strait of Hormuz in that way, in a sort of a naval sense. But certainly we've seen in the Red Sea through the Iranian proxies, the Houthis, they can harass shipping with drones, a very sort of asymmetric way, and cause a lot of problems. So yeah, if the war gets to that stage, we could really see a lot of disruption to crude shipments through that area. And we're talking about Saudi crude shipments, Kuwaiti, Iraqi, a lot of oil.
Yeah. LNG, meanwhile,
yes.
Pricing has edged up this week as well. What are you looking at when it comes to LNG and the flows from that gas product?
The Gulf is a hugely important area for LNG too. Qatar is one of the world's biggest producers, and again, like it's the same
Does
story.
Qatar have
really.
to go through the Straits of Hormuz?
It does.
LNG?
Yes. So the same shipping lanes that are carrying all this crude oil to markets, also carrying a lot of LNG to market. A lot of that, even though it's summer here, a lot of that is still coming to Europe because we've got to restock our gas tanks for the winter ahead. There's been a lot of concern about whether Europe can restock quickly enough over the summer already before this conflict. That had driven up prices, and now with the potential for this conflict to disrupt supplies, it's created a lot of uncertainty, again, on the gas markets. We saw prices spike earlier this week, and they've come off now that Trump has paused and said we'll have these 2 weeks, but all the prices remain elevated.
Okay, so some of that's going to come home, potentially, in terms of winter fuel costs and energy prices in Europe. James, thank you very much indeed on oil, on LNG, and on the risks, of course, to the commodity space when it comes to the Iran-Israel war. James Heron, of course, leading our European oil team coverage. Now, Bloomberg has learned, switching focus to tech now, Bloomberg has learned that SoftBank is looking to team up with TSMC in what could be its biggest ever bet. The plan involves $1 trillion industrial complex in Arizona to build robots and artificial intelligence. Let's bring in our tech reporter, Min-Jung Lee, one of the authors of that Bloomberg scoop. And what a scoop it is. Really fascinating. Loads of questions involved in this. The ambitions of Masayoshi Son. What do we know, Ming?
Right, so this would be another completely new business model for SoftBank and also for Masa Son, because hardware could be a strong feature in this manufacturing AI hub. And Masa Son has been toying with a lot of different big project ideas. And for now, as we know, this manufacturing AI hub is one of the more significant one of them. But there's still a lot of questions that need to be addressed, including who will actually participate in this project. We do know that SoftBank and Masa is very keen to have TSMC on board, in which case chips would be a key feature of this hub. And we know that robotics, industrial robots powered by AI, could turn out to be a strong feature in this complex as well. But we'll really have to see how things evolve from here and how the participation goes from tech giants, AI giants, and whatnot.
What does it tell us, do we think, about SoftBank's vision, the vision of Masayoshi Son? He seems fairly squarely focused right now on AI and trying to make sure that SoftBank has a clear stake, a leading stake in terms of that AI revolution.
Right. He's very invested in contributing to the development of AI, trying to be the leader in this space. One thing we do know is SoftBank is definitely shifting away from the fund model that we saw with the Vision Fund, where SoftBank was investing in hundreds and hundreds of startups to see which one would hit the jackpot. But now he's invested into AI and what really could push SoftBank into that field. To kind of something that could help Masa rebuild his legacy as the SoftBank founder. As we reported before, he now has at least 3 big projects at hand. The Izanagi chip project, which is being done a lot by ARM, the chip unit. And as we all know, there's the Stargate data center project with OpenAI. And now, adding to all of this is the new Arizona AI manufacturing hub that will be that is backed by Arizona government officials and hopefully TSMC as well. But really, we'll have to see how anything unfolds from here. It's still very early days, so I guess we'll have to see maybe, 5 years and 10 years. We'll have to see which one turns out to be the right choice.
Yeah, we're going to look back, aren't we, at some point in history and see whether or not Masa placed his bets well or not. He's got a mixed history, of course, on that front. A great scoop from you and the team, Min-Jung Lee, in Tokyo with that scoop around SoftBank's ambitions with $1 trillion potentially being lined up for Arizona. Now, following the launch of the BTech Europe show today, I'm going to be hosting a live audio Q&A with Bloomberg experts on the opportunities and challenges for Europe's innovators in the AI race. Terminal and digital subscribers can pose their own questions, and you can listen in at Bloomberg.com/live-QA. That's at 1:30 p.m. UK time. Coming up, Rheinmetall replaces Kering in the Euro Stoxx 50. Today, it is a story of Europe's resurgent defence sector and the struggles in the luxury space. We have the details next. This is Bloomberg. Of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that not enough guardrails may be set up just yet.
Headline after headline. Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Welcome back. German defence firm Rheinmetall replacing Gucci owner Kering in the European Stocks 50 benchmark today. Charlie Wells is here to talk us through the change. So we go from defence, we go from luxury to defence, and it tells a bigger picture. This is significant, not just for the companies involved, but more broadly in terms of how we think about the focus on defence versus the challenges of luxury.
I mean, Tom, at the end of the day, if you want to play with the big dogs in the Euro Stocks 50, you got to keep your share price up. And Rheinmetall certainly did. They had an excellent May. They surged 26%, and that actually gave them a market value that was bigger than half of existing Euro Stocks 50 members. So they are getting fast-tracked into this blue chip index. Emphasis on blue chip, and this has got to be painful for Kering because they are now out, and basically this, doesn't bode well for their share price, which has already been struggling this year. They hit a low point in April, and they've just really been struggling, I think, really on the back of Gucci. Kind of that is one of the main revenue drivers, and that company has had a hard time kind of finding direction in the fashion space recently.
What does it tell us then, all of this, about Europe's economy and where the money's going?
I think there's kind of two things here. So it's that big picture theme that we've been hearing all year, which is this pivot to defense, where there is increased defense spending. There is pressure from governments to increase their defense spending. There's, of course, a NATO summit next week where they're going to talk about 5% of GDP going to defense spending, and a lot of these members are on board for that. There are some sticklers there, Spain in particular, a number of others as well. But, that push from international institutions that is really benefiting European defense firms. And it's not just increasing defense spending, it's sourcing defense spending. So where are you getting this material from? Is it coming from Europe or is it coming from the United States? Because in previous eras, of course, even when European governments wanted to increase defense spending, they were buying American munitions. And so the issue here, and was really giving Rheinmetall this boost that we're seeing, this really astronomical boost that has really fast-tracked them into this index, is that European sourcing component.
And that's crucial, and we know that's part of the political debate as well in terms of how to allocate the funding. On the luxury space, Kering, the turnaround, you talked about the travails of Gucci, China's an issue, the product mix arguably is an issue. What is the turnaround story for Kering, if there is one?
Yeah, so I think the question is, could Kering ever come back into the Euro Stocks 50? And I think turnaround, as you say, is a real dilemma that they face right now. They just brought in Luca Di Maio from Renault. He is known in his 5 years there as having been something of a turnaround expert. The share price there doubled under his tenure, almost doubled under his tenure. So that could bode well for Kering. You know what? I also asked this question. I looked back at some historical numbers. I love a little financial history. And basically, I kind of asked, what companies have fallen off the Euro Stoxx 50 and then got back on it? And actually, back in 2011, UniCredit and Nokia fell off. If you were going to guess who made it back on, it's actually both of them. They're both on the Euro Stoxx 50 now. So just because Kering's falling off doesn't mean that this is, a forever change, but they would have to have significant share price momentum. And then there's also the flip. So you got Rheinmetall really getting into this kind of velvet rope guarded index. They get this momentum, ETFs start buying in. Euro Stoxx 50, that underlies some 25 billion euros in ETF assets. So that momentum really helps stocks that get in there stay in there.
Wow, 25 billion euros of assets, and some of that fund flow going to Rheinmetall. The passive flows are going to be a boost. But as you say, maybe we're going to be seeing the Luca Di Maio, who's the incoming CEO of Kering, picking up the phone to Orchel over at UniCredit in terms of how you get back in once you've dropped off the Stoxx 50. Thank you very much indeed for breaking it down for us. Charlie Wells on Rheinmetall, part of the Stoxx 50, Kering falling off. It's been a busy week, of course, for central bank policymakers. At least 18 central banks representing more than 40% of the global economy have delivered decisions. Let's bring in Bloomberg MLI's Sven Ram, who's standing by patiently for us in Dubai. Switzerland, Sweden and Norway. Norway was the surprise. What was behind the moves, Sven?
Morning, Tom. Yes, it was a complete surprise. It upended the market expectations and sent the krone tumbling. Actually, if you look at the May inflation for Norway, it was softer than forecast. It came in below 3%. But what we have seen in the cycle, Tom, is that each time it's come below 3%, it's not been able to stay below that level. Each time it's popped back higher. So the markets were thinking maybe Norway won't be able to cut rates yet. But as we discussed, they just upended the market thinking. Why did they do that? They did that because, increasingly all these central banks are becoming wary of the impact of tariffs on their economies. These are all small economies. These are all economies that are open to trading. And therefore, it wasn't a surprise that Sweden, Switzerland, and Norway all cut rates. Now, interestingly, Tom, if you look at the exchange rates, some of the best performing exchange rates this year are, in fact, from Sweden, Norway, and Switzerland. And therefore, that kind of tightened monetary conditions a bit, and therefore it gave them room to cut rates, and that is what they did this week.
Was it right that the BOE stood on hold, then? I mean, I'm just thinking of the data, the labour market constraints. Are we going to get to August and the BOE has to go for a big cut, maybe 50, given what is happening with the data front here in the UK?
Absolutely, Tom, because I think that, the BOE, the next rate cut is not so much in question because I think that more policymakers than others are inclined towards a rate cut. But the question is what happens beyond August. And if you look at the UK's economy, it's an economy that's mighty vulnerable to the threat of imported inflation. And with crude prices having surged 20% this month, it leaves them in a pretty vulnerable position. And if you also look at the history of the UK, Tom, in the past decade, headline inflation has averaged 3.1%. So if they get to 4%, that will be about as loose as a policy as they can get, because if they continue cutting rates in the face of the historical evidence on inflation and the threat of imported inflation, I think they are setting themselves up for an overshoot in prices yet again. So I'm not too sure that the BOE's policy committee as a whole will want to get themselves into the situation and rekindle memories of what happened in 2021 and 2022 when inflation got into double-digit territory.
Ben Ram from MLive, thank you very much indeed. European futures pointing lower as the US looks to reopen. Bloomberg Brief is next. This is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Let's talk about this villa. Very traditional.
a lot of things of the past?
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have enriched technology progress a change during my life, rich by experience.
Latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
It's 5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Friday morning. Giving diplomacy a chance, President Trump will decide within 2 weeks whether to strike Iran. $1 trillion pitch. SoftBank's founder Masayoshi Son teams up with TSMC for an AI mega hub in Arizona. And the big reveal. Tesla is set to launch its robo-taxis in Austin this weekend as lawmakers attempt to block the operation. It's the continued push and pull for this oil market. The U.S. was offline yesterday, but Brent crude was trading. That's what you're seeing with reports originally yesterday that lawmakers are readying for a strike over the weekend on Iran from the U.S. So that's how you get this run up in crude. But then Trump says he'll give diplomacy a chance. 2 weeks, and then you get this drop over the past 2 days. We still are stronger. For the week, we're up 20.5%, headed for the biggest weekly gain since 2020. Meanwhile, for this equity market, the steepest of losses for the future market starts to ebb. Again, cash markets were closed yesterday. Futures were open for some of the trading day. They were down sharply, more than 1% at one point. So they recovered to something that looks down about 1/3% for most of the major indices. For the bond market, there is a bid coming through. Again, the last cash trading day was Fed decision day. We're looking at unchanged, though, this morning. For the most part, the bid comes from the long end of the curve down or higher, not bid, rather, selling. The losses coming for the long end of the curve. We did have a bid this morning, and that's changed in the last hour or so. Let's get you some stocks to watch now. With that is Bloomberg's Joe Easton. Good morning, Joe.
Hey, Danny. So Tesla shares rising today. It is all about these robo-taxis, as you mentioned. A couple of reports out on this unit of Tesla. Potentially, they are going to be launching next week. It is hotly anticipated, but also a group of lawmakers over in Texas actually saying that these should actually be delayed due to some safety concerns. We'll wait to see whether this progresses, but there's that quote from those lawmakers over in Teslas. I don't think these are actually taxis, though. They are just cars. I'm not sure why we call them taxis. But moving on, we've also got Circle Holdings. This one gaining as we recently saw the approval of a stable coin over in the US, so down in the crypto space. It's a second big day of gains following the move that we saw on Wednesday before the closure yesterday. So that one up 14% today. And then finally, just here in Europe, Eutelsat, this is a rival to Elon Musk's Starlink satellite company, soaring as it gets around €1 billion in funding, including from the French government. And as usual, check out the Before the Bell opening wrap on the terminal for a fantastic wrap-up of all of these and more, Danny.
Joe, really appreciate it. Joe Easton, we'll catch up with you later in the hour. Also coming up this hour, we'll discuss the Fed's decision to wait and see with our guest, Seema Shah, Principal Asset Management, and Priya Misra of JP Morgan. Principal Seema Shah weighed in on the Fed's rate path ahead, writing, quote, with inflation already running above target and expected to see tariff-induced boost in Q3 and economic data still looking fairly resilient, the current environment of persistent uncertainty is ripe ground for a policy misstep. Joining us now is Seema Shah, Chief Global Strategist at Principal Asset Management. Seema, great to see you this morning. A Fed that basically did nothing, elicited no market response. What are the risks for a misstep at this point?
Good morning, Danny. Well, I think that the key misstep would be, I guess, in either direction at this point, simply because there is so much uncertainty, not just on the trade front, of course, but also now on the geopolitical front. So, given that economic growth is still pretty strong, it's not really showing any clear urgency for rate cuts. And of course, then we have the inflation above target expected to rise over the coming months, both from oil prices and trade tariffs. Then it certainly makes sense that the Fed should be sitting on hold at least until they have a little bit more clarity about the path ahead. So certainly from our perspective, we're not expecting any changes from the Fed until you get later into the year, into Q4.
Even so, perhaps in a sign of the times, it was an extremely divided Fed. If just one of the Fed members had reduced their dot plot from 2 to 1, the average would have just been priced in for one cut for the year. Of course, the dot plot showed no change. Seema, is this a Fed that's maybe becoming less dovish, or at least is less dovish under the surface than the headlines would suggest?
Yeah, I think so. And I think that came through in the press conference when we were hearing from Powell. Given that the summary of economic projections shows a pretty significant spike in inflation over the coming months, I mean, from 2.1% now to around 3% by the end of the year, it certainly makes sense that there'd be a little bit more hawkishness leaking in. And, as I said, we are expecting just a cut to come through in Q4. That's just one cut. So it's certainly in line with where the committee is starting to shift. But right now, given the amount of uncertainty, it almost makes sense just to have everything staying on hold, both from an actual policy rate perspective right now, but also within the dot plot. They cannot give any really clear signal until they know exactly what the path ahead is going to be.
And anyone who knows what the path ahead is, Seema, needs to be a fortune teller, because it is such a confused environment. One of the very decisive moves, though, with a market that's been stuck in a trading range over the past week, has been oil. This month is up 20.5%. That's the most since COVID start 2020. But you have global stocks that are up nearly 1%. You have bonds that have returned 0.5%. Is crude playing a weaker role in global markets at this point, or are we just underestimating a very large tail risk?
Well, I think there's two key reasons why you're not seeing the market reaction to be very significant to the turmoil that's emerging from the Middle East. One thing is that although prices, as you said, increased pretty sharply in the past week, they're still significantly below the 2024 average. Right? They're still sitting below the $80 per barrel level that we saw last year, and certainly much below where previous conflicts have taken them. The other thing is that history tells us that geopolitical shocks, although of course they can be very significant in nature in the short term, they don't really typically have a very sustained impact on the market. The one caveat to that is when you do get a very meaningful increase in oil price to above $100 a barrel, it's sustained there, you get it feeding through to inflation. But that would be just reinforcing some of the concerns that we have today. So it's right that investors take notice, of course, and you want to have some safety within your portfolio, but actually trying to reposition portfolios to prepare for a geopolitical shock has typically been the wrong move for investors.
I do just wonder, Seema, it seems like we keep having shocks. And to some degree, they're the same flavor of shocks, let's say. They're politically driven in this political-driven economy. Does that overall dull the impact of when you get these headlines that in theory should and sometimes do move markets? At least we've seen that this year, but often their impact is short-lived.
I think there is certainly some fatigue setting in for investors in the past 5 or 6 months. I mean, there's so many hits coming from multiple directions. They're repeated on a daily basis, sometimes intraday, that I think it does become difficult for investors to keep reacting. And so, which I think is the right decision, is to start trying to look through the noise, maybe take a bit of a 6-month longer term view and then position in that perspective. So when you're thinking about it in that way, I think it does make sense that stocks are a little bit higher. The risk outs are doing fairly well. Still, of course, with a lot of volatility. But if you are looking out over that 6-month perspective, you do feel some sense of optimism that the US economy, the global economy, will ultimately be okay. Earnings growth will still be fairly positive, and therefore you can still see positive returns for equities.
So just how bullish can you be on equities right now, Seema? Just how bullish are you?
We're overweight. I wouldn't say we're very, very bullish. We have pulled back a little bit, as I think everyone has in the last 6 or 7 months, as we've started to see concerns growing. And remember, from a growth perspective, coming into this year, the consensus forecast was that the US economy was going to grow by about 2.2%. That's now fallen to around 1.5%. So just with that downshift in growth, you have to have a little bit less optimism. That doesn't mean to say that we think that markets are not going to go much higher. But certainly the gains that we're expected a little bit more constrained than what we've seen in previous years, and certainly what we were expecting to see at the beginning of this year too.
But even for the bond market, if this is a more volatile world, and specifically more volatility around inflation, Seema, does that not suggest that term premiums should be higher than they are right now? Is there not still a degree where this is a bond market that is priced for the great moderation?
I would actually say that when you're looking at 10-year Treasury yields, there's a ton of volatility, and as you said, there is certainly a chance that you do see risk premium, term premium rising. But at this level, this is fairly close to what we would consider to be fair value. I think the risk really sits at that 30-year point, and everything that you've mentioned with regards to political shocks, geopolitical risks. To me, all this is adding up to is greater inflation in the long term with concerns around fiscal policy. And to me, that really adds on to that longer term. So the 10-year point for us is okay. So you're looking at more of a shorter duration belly of the curve. The concerns really sit at that longer end of the curve. And again, that's not just for the US, that's actually a global narrative that we're starting to see emerge when you're looking across almost all countries.
So Seema, and that's a great point. We even saw Japan announce that it was going to be pulling back on some of its ultra long-term debt today. Seema, so if the US economy is looking solid and you can be more confident on that, if some of the geopolitical shocks, again, are short-lived, does it mean that that is the greatest risk, fiscal, that a growing deficit is the greatest risk to this market right now?
I think it's a risk. I also think it's a risk which is going to continue to percolate over the coming months, quarters, and probably a couple of years as well, until it really gets to the point where the US government has to confront the very, very significant debt load that it has. So in the meantime, to me, the 30-year point hovering around the 5% level, range bound around that, certainly starts to make sense. I don't necessarily think that this is going to be a moment where the market really is facing a major fiscal crisis that would change the trajectory of the markets over the coming years.
Seema, really wonderful to catch up with you on this week, on this Friday ahead of the weekend. Hopefully we get a weekend coming up. Seema Shah of Principal Asset Management. Let's now get you some other top stories that are trending on the terminal this morning. UK retail sales saw their sharpest fall since 2023. Sales dropped 2.7% in May, marking a reversal in consumer spending. The sharp drop was driven by a 5% plunge in food sales. PopMart shares slid in Hong Kong after a story in a Chinese newspaper called for the regulation of blind box toys and trading cards. The story in the People's Daily said some business models induce minors to become addicted to buying these products. PopMart sells the popular Monster Dolls Labubu. Temu's U.S. shares, I can't say that seriously. Anyway, Temu's U.S. shares decline has deepened. According to Bloomberg data, they dropped more than 25% from May 11th to June 8th. The online retailer has drastically cut ad spending targeting American consumers, signaling a shift in focus after President Trump's tariff announcement. Coming up, President Trump gives 2 weeks to make a decision on striking Iran. We're going to have more on the Middle East and Washington's positioning. That's coming up next on your Bloomberg Brief.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday, only on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Technology is embedded in every aspect of our lives and laying the foundation for the future. From finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Annabelle Drulers in Hong Kong. I'm Sherian in Tokyo. Watch Bloomberg Tech Asia. Premieres June 27th only on Bloomberg Television.
Over the next 2-3 weeks.
At some point in the next 2 weeks.
Nuclear, I'll give you 2 weeks for approval.
In about a week and a half, 2 weeks.
President Trump there giving 2 weeks in the past for talks, resolutions for varying scenarios, and yet again, we get 2 weeks. He has once again given himself 2 weeks to decide whether or not to strike Iran. Meanwhile, Iran's foreign minister said that it doesn't want to negotiate with the U.S. or anyone else while Israel's strikes continue. For the latest on the risks out of the Middle East is Bloomberg's Middle East Horizons Middle East and Africa host Jomana Bursechi. Jomana, what does the path for diplomacy look like right now?
Yeah, well, it seems as though the path towards the very worst case scenario has, or at least the decision towards that has been postponed. That 2-week window, as you say, could mean tomorrow, it could mean the end of 2 weeks, or also could mean much later on as well. But what the significance of those comments is that President Trump does indeed seem to be opening the door to diplomacy. And we know that the Iranian foreign minister, as we speak, is in Geneva meeting with his counterparts in Europe from Britain, France, Germany. They are ostensibly also talking about the nuclear deal, but at this point it is unclear whether one of the takeaways from those discussions is going to be what terms would be acceptable to Iran in order for them to re-engage once again with the U.S. Because the Iranian foreign minister just a short while ago said that they're not willing to restart talks as long as Israel keeps striking. So how the U.S. administration sort of navigates that and whether they can apply pressure on Israel to slow down the intensity is a big question as we think about the diplomatic channels. But in the meantime, the tit for tat, the attacks and counterattacks between Iran and Israel continue. Israel continues to strike at key military sites and nuclear sites, and Iran yesterday struck at an Israeli hospital that caused the number of wounded, resulted in a number of wounded of north of 200. In response to that, the Israeli Defense Minister, Israel Katz, has once again sent a message to the supreme leader saying that they will strike back and will not spare him this time around.
Jomana, there was also some reporting on 2 various lawmakers in Iran threatening a closure, something that looks like a closure in the Strait of Hormuz. What are the risks that we could see something of a disruption that impacts global oil markets?
Yeah, I mean, I think at this point, most people are familiar with the strategic significance of the Strait of Hormuz. Obviously, about 20% of the world's oil and gas passes through that very key waterway in the region every single day. And Iran has for long used the threat of closure as a means of deterrence to the West. Now, some of the more hardliners in the Iranian regime have been speaking the last couple of days. The former economy minister saying that Iran should shut the waterway and block vessels from passing, but they haven't actually gone down that route. And you have to remember, Danny, that for Iran themselves, it is a key way for them to get their own oil exports out because their key buyer is China. So they also need their vessels to continue operating to offload some of that oil. And interestingly enough, the data that has been compiled by our team has shown that Iranian oil exports have actually increased in the last 5 days, which suggests that they're trying to get a lot of their exports out in anticipation of a potential disruption. Shipping costs also a lot higher, anything between 50 and 100%. So people are very cautious.
Jomana, thank you so much for your excellent coverage all week. That is Bloomberg's Jomana Bersecci. A check on Brent crude as we head into the break, lower this morning by more than 2% after a similar move higher yesterday, with weekend risk taken off the table, at least for now, again, with Trump saying 2 weeks is his decision timeline. Oil, though, higher by more than 20% over the past month, for the biggest month since 2020. Coming up, SoftBank's big bet. More on Masayoshi Son's $1 trillion AI pitch. That's coming up next.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appear, immediately I asked whole corporations study how will you bring generative AI to their job.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
The flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that not enough guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
It
It's your Bloomberg Brief. I'm Danny Berger in New York. Let's take a look at the front pages this morning. What's making headlines in the top outlets? First up on the Financial Times. They lead with European countries holding talks with Iran. Those talks set to take place today, Friday, with Britain, France, and Germany. They will be taking place in Geneva. Next up, on the Washington Post, a federal appeals court has ruled that President Trump can keep the National Guard in L.A. A three-judge panel decided unanimously in favor of the president. Two of the judges are indeed Trump appointees. And finally, one of the most read on Bloomberg this morning, we have learned that SoftBank founder Masayoshi Son is looking to team up with TSMC. It could be his biggest bet ever. The plan is a $1 trillion industrial complex in Arizona to build robots and artificial intelligence. For more, let's bring in our technology reporter, Minjung Lee, one of the authors of that Bloomberg scoop. Minjung, first of all, excellent work. What more do we know?
This would be another completely new business for SoftBank and Masa Son. One reason being it could have a strong hardware feature, which would be new for SoftBank, which has been always focused on software. And Masa Son is just in the process of toying with a bunch of big bets, and now we know this manufacturing AI hub is the more prominent one among them for now. But there's a lot of things that need to be figured out, including which companies will actually come on board, as you mentioned, whether it would be TSMC or not, because SoftBank doesn't really do any manufacturing itself. So the entire mix and capacity and the shape of this industrial park complex would really depend on which companies join hands with SoftBank. So basically, which companies that Masa is able to win over with his charm. So we'll see how it unfolds from here.
Minjung, it's been a period of just incredible spending by all of the tech giants on AI. What does it tell us about their desire, SoftBank's desire, to keep up with the likes that we've seen from Meta and others?
Right. Masa is really now coming out with one big project after next to really have his name out there and push forward with AI developments. With what we know, he already has 3 big projects in the works based on our reporting. This includes the big chip project. Chip is an Augie project that is being led by the chip unit ARM. And the other one is, as we all know, the Stargate data center project with OpenAI. And now, as we've learned, there's this new big Arizona AI manufacturing hub in the works, which would be backed by Arizona government officials. But it's really still very early days, and Masa is trying to kind of rebuild his legacy after the Vision Fund kind of didn't quite live up to his expectations in terms of returns and outcome. So we'll have to see which, if any of these projects will end up being the real cash cow for SoftBank and Masa.
Minjung, just quickly, only a minute here. What does it say about the politics of this moment? President Trump very keen to have people come into the U.S. and build this type of thing.
Right. He's really being very smart about playing really into the needs of Trump in America. And with this manufacturing hub, one of the pitch includes that this, if successful, will bring all the manufacturing power back to the U.S. With a particular focus on Arizona. And if this model is successful, he's pitching that this could potentially be replicated in other states as well. So we'll really have to see how it unfolds from here, though.
We absolutely will. Minjung, again, excellent work with that scoop. That is Bloomberg's Minjung Lee in Tokyo. Coming up, we're going to wrap up the big week of central bank decisions and a lot of risk on the horizon. JP Morgan's Priya Misra joins us next on your Bloomberg Brief.
how much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for VVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Friday morning. We start with geopolitics. Trump giving himself a 2-week deadline for a possible strike on Iran. Next up, a $1 trillion pitch. SoftBank founder Masayoshi Son teams up with TSMC for an AI mega hub in Arizona. And the big reveal, Tesla set to launch robo-taxis in Austin this weekend as lawmakers attempt to block the operation. It has been a roller coaster of a week for Brent crude, but by the way, on the month, we are up 20.5%. That will be the biggest month since 2020. You can see the past 2 days, the U.S. was closed, but Brent crude runs up. And this morning, we get a drop of about 2%, a little bit more than that, leaving the past 2 days just a little bit higher, with President Trump saying that he would take 2 weeks for diplomacy to make a decision. Your S&P 500 futures session, again, traded a little bit yesterday. It is weaker this morning, but not as weak as it was yesterday, down about 0.2, about 1/3% for the NASDAQ. Meanwhile, treasuries, they have been waffling between gains and losses this morning. We continue with slight losses, but basically unchanged. 4.39% is where we stand on your 10-year yield. Let's get you some stocks to watch this morning. With that is Bloomberg's Joe Easton. Good morning, Joe.
Morning, Danny. So Tesla gaining today, as you mentioned a moment ago. It is all about these robo-taxis and whether or not they will actually launch next week over in Texas. And it does come as there is some pushback from some senators, a group of them saying that they want this to be delayed due to safety concerns. Here's that quote from them on the screen here. The Senate and the House members formally requesting that the robo-taxis are delayed. What can go wrong with self-driving cars? But moving on to the DIY space, a bit of a bidding war potentially for a company called GMS. Home Depot coming in, according to the Wall Street Journal, actually looking to make a rival bid to another firm, QXO, who had bid around $95 for GMS. So we could see that one jumping at the open. We're up 20% on GMS in the pre-market. So lots of focus on DIY home repair this morning. And then finally, one more to bring you, the firearms maker Smith & Wesson jumping as well in the pre-market as the sales. Excuse me, I've gotten that completely wrong. I've had a nightmare on that one. It is down 13%. The stock had rallied into the results, but actually missing on EPS. I think I need to update my data. The stock declining after a decent run recently. Keep an eye on that one in the pre-market, Danny.
And Joe, with that, I will say happy Friday. Go enjoy your weekend. I think it is time, Joe Easton there. It's been a week for all of us. Even with yesterday off in the U.S., it was a busy week of central bank decisions. J.P. Morgan's Priya Misra playing down the latest Fed outlook in the SEP, rightly so, saying that the projections reflected a stagflationary bias, that the goals are in tension. But the summary of economic projections matters less since there are many unknowns: trade policy, fiscal policy, geopolitics. Joining us now is Priya Misra, portfolio manager at J.P. Morgan Asset Management. Priya, great to see you on this Friday.
Hi, Dan.
And look, amid all of those risks, the Fed was able to kind of do nothing and get no market reaction at the same time. Is that what success looks like in 2025?
I think for the Fed, that they're in such a difficult position. They've got this stagflation issue. They've got elevated uncertainty. I think Chair Powell said it's less than it was in May. It's still very high. So, and inflation's still above their target. So I can see why the Fed probably wanted to take the day off on, Wednesday, but they had to come out and say something. I think what we're looking for is the sense of the reaction function, and we didn't get much from the Fed. I looked at that dot plot. Now I know that there were these, the median still showed the cuts, but there's these two camps. There's the camp of the people who don't want to cut at all this year. I think they're the ones who think that inflation might be persistent, that the rise due to the tariffs might exist all year, so you don't have to cut. And then there are those who think it's going to be transitory. And I think we're going to have to wait for the data. And that's what Chair Powell tried to say. He downplayed the dots. So I think it's the stagflation issue. It's high uncertainty. It's the Fed saying, not my problem yet. I think what was interesting was there's this concern around the labor market, and Chair Powell tried to downplay that. Now, I think that's what we're going to be watching, the growth data as well as the inflation data. The Fed is more focused on inflation, but I think the market's going to focus on that labor market report as well.
Is there kind of an irony of having such a divided Fed, such divisiveness on the dot plots, and at the same time, you had their statement saying that there was less uncertainty, even though there was still uncertainty. Is there a bit of a contrast there?
I think it's all relative. So relative to May, there was less uncertainty. But to your point around the divisiveness, I think it's because look at the levels of uncertainty here, not just in terms of trade policy. I think Chair Powell tried very hard not to talk about fiscal policy, but we've got the one big beautiful bill also going through. We've got 2 weeks for that, for their self-imposed deadline, which I really struggle to see how that'll happen. But over the next few months, we're going to get changes in fiscal policy, changes in trade policy. I mean, even if you leave geopolitics aside, deregulation. And so I think the Fed is saying we have to look at the big picture and see how the economy is responding and then take a call. So I think what they're telling us, if you read between the lines, is they can't be preemptive. So I think this idea of insurance cuts or the Fed trying to get ahead of what might be happening, that's not happening. I think the market has to be aware of the fact that there's no Fed put here. They will absolutely respond if there's clear economic data, but it's not clear right now. The economy is resilient and inflation's above target.
By the way, a great reminder that the start of July is also going to be crazy because we have both the trade deadline and the big, beautiful bill self-imposed deadline, both self-imposed to some degree. Okay, so with all of that, how do you even begin to understand what is and what isn't priced into the bond market?
Great point. So let's look at the bond market in terms of the Treasury curve as well as spreads, credit spreads. So on the Treasury curve, I think that's where it's interesting. Those all-in yields, if I add Treasury rates to spreads, credit spreads, we're looking at good level of yield. So if you think about what do bonds add to a portfolio, they're giving you income. Now, the question about do they give you diversification if risk assets struggle, I think the intermediate part of the Treasury curve does give you that. So the market is pricing in some rate cuts, but not aggressive. The first rate cut is really priced by September. And I think that's the market saying, what if things slow down? We know that tariffs are likely to increase inflation, and the Fed sort of told us that, even though the inflation readings have been positive, that's going to affect demand. And so if the economy slows down, we know the Fed will respond. So those rate cuts, in my mind, are not overdone. I think the market is correctly pricing in this tail risk that the Fed might have to cut more. So I don't think the rates market is pricing in, too many cuts. And then we look at spreads, and I know you're going to say those spreads are tight. They're tight for good reason. Companies look strong in terms of balance sheet, in terms of earnings. And so those spreads are tight, but fundamentals, technicals, we're going to get a lot less credit supply over the next few months. So, we like, credit products here. We like owning bonds. We're still seeing inflows into bond funds as people are looking at 5.5%, 6% on investment grade corporate, 7% if you go into high yield. And they're saying, actually, given all the uncertainty, let's look at getting some income and the hedge property in the 5-year sector in case the economy does slow down.
So you mentioned there's less supply in corporate bonds, more supply, assuming what happens with the big beautiful bill is what happens for government bonds. There's maybe more sources of demand coming. The stablecoin legislation that basically mandated that these dollar-pegged stablecoin issuers buy more shorter-dated treasuries. You have SLR reform too, allowing banks to hold more. Does it move the needle at all? Does it maybe, if what Washington create more demand, actually do that?
I think there's some sources of this domestic demand, to your point, coming in. The curve has also steepened. So that term premium that we look at, which is how much additional yield are you getting from extending out in duration, that's gone up. So the market is pricing in this fiscal risk that we all know about. It's the trajectory problem. I think that's priced in. And then there's tariff revenue. The CBO projected $2.8 trillion in tariff revenue. Now, we have to still see what tariffs will end up. But I think if you're going to get 10 to 15% effective tariff rate, you are getting revenue from that side as well. So I think much is made about the deficit, rightly so. I think we've got a long-term trajectory issue. But to your point, there's sources of demand. The market's pricing some of it in the steepening. So we're less negative in the long end. Do I think that the long end will be what it was for the last few decades, where it was a source of diversification? Less so now. But I'm less worried about the very long end now because, to your point, that's happening. And the Treasury, we're going to be watching what Treasury does. We saw what the MOF is doing in Japan. They're reducing the amount of issuance in the long end. I think the Treasury might be next. Maybe not as early as the August refunding, but over the next year, I think they're going to issue less.
But isn't that something that like emerging markets do, that they cut their, or they don't even issue long-term bonds because there's no demand for it? Is that not in itself kind of concerning?
No, I think the Treasury, I'll give the Treasury credit, and it happened in 2023 as well. The Treasury as an issuer should look at where is the demand and let's issue supply to meet it. And I think there is more demand in that front end between banks, as you point out, stablecoin. Look at the $7 trillion sitting in money market funds. That's also sort of short-dated demand. Mutual funds, the index is a 6-year duration. So I would say Treasury should skew issuance in the front end. We still have to deal with, they have to issue it. So we still have to deal with the longer-term deficit trajectory and, let's see how this OBBBA, as I call it, not the triple B rating.
Yes, okay, noted.
It's in the name, but, we have to see what that ends up. But the Senate version is not much more than the House. Actually, it's less deficit. We have to see what the CBO is going to score it. But I think there's understanding in Congress, in Washington, that we have a deficit problem. And that's why they're trying to cut back wherever they can, and the market's pricing that in. So I think it would be smart for the Treasury to actually skew some of that issuance in the front end.
So the one BBB, the one triple B. Not the credit rating, but yeah.
Curve is still AA.
Priya, thank you so much for joining. Really great to see you. Enjoy your weekend. That's Priya Misra of JP Morgan Asset Management. Let's now get you some other top stories that are trending on the terminal this morning. As Priya was mentioning, Japan plans to cut its super long bond issuance this year by more than what it had earlier reported. The finance ministry is proposing reducing issuance by 3.2 trillion yen. That's about $22 billion through the end of March 2026. Markets were expecting a reduction of 2.3 trillion yen. Pop Mart shares slid in Hong Kong after a story in a Chinese newspaper called for the regulation of blind box toys and trading cards. The story in the People's Daily said some business models induce minors to become addicted to buying these products. Pop Mart sells the popular monster dolls, Labubu. Temu's U.S. sales decline has deepened. According to Bloomberg data, they dropped by more than 25% from May 11th to June 8th. The online retailer has drastically cut ad spending targeting American consumers, signaling a shift in focus after President Trump's tariff announcements. Coming up, the clock is ticking on a potential diplomatic resolution to the Middle East. President Trump gives 2 weeks of a decision time to decide on striking Iran. We're going to have more on that next, and a meeting in Geneva. This is Bloomberg.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars.
Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me. Now we're playing.
Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5.
Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
I have a message directly from the president, and I quote, "Based on the fact that there's a substantial chance of negotiations that may or may not take place with Iran in the near future, I will make my decision whether or not to go within the next 2 weeks."
President Trump setting a deadline to make up his mind on the Israel-Iran conflict. Meanwhile, Iran's foreign minister says that the country does not want to negotiate with the U.S. or anyone else while Israel's strikes continue. Joining us with the latest is Bloomberg's Oliver Crook. Oliver, it does seem like there are going to be some sort of negotiation, though. European leaders are set to meet with Iranian counterparts in Geneva. What's likely to be the outcome if Iran doesn't want to negotiate as long as strikes are continuing?
Yeah, so let's lay this out in terms of who is meeting whom today. So it's going to be the Iranian foreign minister arriving in Switzerland, Geneva, and speaking with the foreign ministers of Germany, the United Kingdom, and of France. We'll also have the EU High Representative Kaja Kallas involved in some of those discussions. And the idea here, Danny, is to begin to start to talk about basically the framework, the architecture of what a sort of nuclear program monitoring system could look like if there is a ceasefire, if there is some kind of peace, one sort of step to diplomacy. As we heard there from Caroline Levitt, you know, Donald Trump is trying to give some runway, apparently, to diplomacy over the next 2 weeks. But as you point out, Danny, in order to have diplomacy, you need to be able to talk. And the Iranian foreign minister said that he will not talk to the United States while they're bombing, the Israelis are bombing Iran. So that does leave a little bit of space for the Europeans to come in as basically part of the communication team and potentially relay information over to the United States. Now, we should say, as far as the Europeans are concerned, they have limited clout diplomatically in the region, over Iran, over Israel. We know that they don't have really very much leverage over those two, but they could serve potentially as a sort of communication vessel between what the Iranians are looking for and speaking over to the United States. That being said, I think it's very unlikely that you get a grand proposal out of this meeting today, because as we know, Danny, it's really the Trump administration that wants to author how this is going to go and sort of present this. They're not going to want to jump on whatever the Europeans have negotiated. So that being said, I think that the Europeans could be potentially useful in terms of a form of communication. But we should say, Danny, yet again, this is another example of, in the world of Trump, how the Europeans are really going to be spectators rather than protagonists in geopolitical conflict.
Well, can we also just emphasize, Oliver, how different the language coming out of European leaders, the likes of Emmanuel Macron, has been versus Trump? It seems like they've been talking about de-escalation, while Trump has gone back and forth as to whether that's the case for the U.S.
Yeah, and Trump, I think that is part of his tactic, right, is to create strategic ambiguity, to say, you know, we could do this, we could do that. Nobody knows what I'm thinking. This is what he's been saying, you know, over the last 24, 48, 72 hours. And that is really sort of the impression he's been given. And frankly, it's been successful, right? Nobody really does know what he's thinking. And I think as a consequence, the Iranians don't really know how to sort of calculate what the U.S. is willing to do here. Again, the Europeans, generally speaking, will always be saying diplomacy first, we need to de-escalate. That being said, Danny, there has been basically zero criticism of the Israelis from the European side so far. We should say that the tone has really turned in terms of criticism of Israel, in terms of Gaza over the last couple of weeks and months. But in terms of Iran, the Europeans have been, frankly, kind of tacit in their sort of criticism, no criticism at all, tacitly really supporting what the Israelis have been doing in terms of their campaign in Iran.
Oliver, thank you so much for that excellent coverage. That is Bloomberg's Oliver Crook, and we are getting a few lines coming from the French President Emmanuel Macron at the moment, saying that nothing justifies Israeli hits on civil infrastructure, urging Iran to return to the negotiations table, saying that the UK, France, Germany will present a proposal to Iran today. Again, that is ahead of that meeting Oliver was just describing in Geneva, Switzerland. Let's turn to tech now. TSMC ADRs are edging higher in the pre-market this morning. That's as Bloomberg learned that SoftBank is looking to team up with TSMC in what could be its biggest ever investment. Joining us now is Bloomberg Tech Europe anchor Tom McKenzie. Tom, what is SoftBank's aim in this?
He said, I'll let you know in 2 weeks. Still yet to know whether he actually trusts Vladimir Putin. But we did learn a few critical things today or yesterday from the White House that is going into President Trump's decision. He wants to see two clear things. He wants to see an end of uranium enrichment in Iran. He also wants them to not be able to achieve a nuclear weapon at all. And at the same time, the White House said Iran already has all the components that it needs to make a nuclear weapon if it wants to. It would only take a decision from the Supreme Leader, and they could be able to do that in a matter of weeks, is what the White House said. But as you said, the president is meeting again with his national security team today. He has been doing that every day since Tuesday. He also has 2 other meetings on his schedule on Saturday and Sunday. And so presumably we'll find out by the end of this weekend whether the U.S. will make a decision. Increasing political pressure on the president because this is a decision that is really dividing his base. He went into office and campaigned on this idea of being isolationist and bringing the U.S. out of wars. He previously promised to end the war in Ukraine and the conflicts in the Middle East in 24 hours on the campaign trail. So you have many of his supporters now raising questions about why he is considering even getting more directly involved beyond a defensive stance in the conflict between Israel and Iran. And he's been talking to supporters, people on both sides of this issue in recent days. And it's really remains to be seen which side he's going to side with.
Kayla Gardner of Bloomberg, thank you so much for that reporting and all the reporting over the past couple of days. Joining us now is Andrew Bishop of Signum, who's been writing amazing notes, who I've been following every single day. Andrew, thank you so much for being with us. I want to start with your expectation. Will the U.S. get involved or not? And what exactly is going to tip the difference in that decision?
Yeah, hi, Lisa. So our expectation at Signum is that the U.S. will not get involved. We have about a 35% chance or so that the U.S. does get involved directly. But the reason for that is not that we think the president is, bluffing or going to chicken out. None of that. Clearly, the U.S. military defense posture is one of preparations for a real attack. There's no question. He's serious about this. The reason we don't think it's likely in terms of above 50% is if you compound the odds that Iran agrees to a deal, right? So basically Iran fully agrees to relinquish its nuclear program, plus the odds that the Israelis are able to achieve what they want to achieve at Fordow, which is Iran's sort of last hardened nuclear sites. You compound those 2 odds, you get to, 70% chance or so that the U.S. doesn't, quote unquote, need to intervene. And as you just mentioned right before, I don't think President Trump is sort of chomping at the bit to get involved in this war. I think he will if he has to, but only if he has to.
Meanwhile, we're hearing from the energy minister of Israel earlier this morning that Israel plans to complete the Iran task, whether or not the U.S. joins. There's a feeling we've heard from Netanyahu, the prime minister of Israel, who's come out and said that we can accomplish our goals with or without the United States. What does that look like in real terms, and how disruptive could that be, whether or not the U.S. decides to get involved?
Yeah, it's a great question, and it's sort of an opportunity to sort of recap the 3 scenarios, right? In our view, this is going to end with Iran basically without a nuclear program. And there are 3 ways you can get there. Either the U.S. does it, Israel does it, or the Iranians agree to do it voluntarily. our base case is that, as you just hinted at, Israel is essentially going to destroy Fordow on their own. We've long said that we thought they had the capability to attack Iran on their own at a time when no one else was saying that. That has now happened. We think they're going to finish the job successfully on their own. In parallel to that, we're going to have negotiations. And once Fordow is destroyed, I think we're going to get an agreement with the Iranians to essentially put this past us. The reason I think we're going to get an agreement, and Israel will also stop its attack eventually, and by eventually I mean about 10 days from now, is essentially because the Israelis, just as much as the Americans, understand that you actually need an agreement in place for the after war, right? You're going to need to be able to monitor what's going on in Iran. You can't just bomb it for the next 5 years straight.
Andrew, it's Brian Levitt here. What do you think the after war looks like? I mean, we talk about the potential, you talk about Israel perhaps being able to accomplish what they're seeking to accomplish, but what does that after war period then look like?
Yeah, so from a military perspective, the two goals are basically no more ballistic missiles, so no ability to produce them, not much by way of stockpile, just no nuclear program, no enrichment, no weaponization program. And then the third thing, which I think you may or may not be hinting at, is this question of regime change. We think regime change in the sense of someone of a completely different ilk taking over is very unlikely. What's more likely is that Khamenei himself actually loses power and is replaced by someone else, perhaps from the IRGC, the Revolutionary Guards. To us, that's not regime change, that's leadership change. But interestingly, and I'll stop here, people are very focused on the odds of that happening during the war. So this, 3-week period, let's say. Political science precedent shows that the most likely time for Khamenei to actually lose power is after the war ends, when people really have the time to get upset.
Does that give you the sense then that this conflict perhaps becomes colder in the short term, but just continues to persist over the number of years?
Yes, I think that's a fair assessment. Israel has long had this approach of sort of what they call mowing the lawn, right? So you conduct attacks, you wipe out your enemy's capabilities. When they grow back, you come back in. That's what an Iran deal would ideally avoid. But, the word ideally is doing heavy lifting here.
Andrew, there's also the issue of how much this can continue to disrupt oil output from Iran and potentially shipping from the rest of the world. Does this take the idea of blocking the Strait of Hormuz somehow off the table based on the fact that what you just laid out didn't really leave a lot of room for that potential?
Yeah, it's a great question. So a few things on Iran's ability to sort of disrupt the Strait of Hormuz. First thing is, just to be clear, we don't think it's likely. We think Iran is unlikely to do it because it would put a target on its own oil infrastructure's back, right? There would be a high risk that Israel and or the U.S. would attack Iran's oil infrastructure to sort of punish it for disrupting Hormuz. Second, more importantly, Iran doesn't have the ability to destroy Hormuz. It would be difficult for Iran to do in quote unquote peacetime as hybrid, a hybrid warfare tactic. It's going to be very difficult / impossible for Iran to do right now with all Israeli and American eyes on its sort of mining and naval capabilities. Third thing I would say, though, is the big risk to oil, in our view, actually comes from Israel attacking Iran's oil infrastructure, not from Iran disrupting the Gulf infrastructure. And that's not because I'm picking on Israel. It's just because if you're Israel, this is your once-in-a-lifetime opportunity to essentially wipe out the revenue source for the Iranian regime. Now, again, that's not a base case, but it's the risk we're keeping an eye on.
And maybe the reason why Iran is trying to ship as much oil as they can off their shores right now to try to maximize on that. Andrew Bishop of Signum, thank you so much, and hopefully we'll get to speak with you soon. This is really the key question, right? Ultimately, what are the roads to disruption in oil supplies that could justify some of the move that we've seen so far over the past couple of weeks?
Right, and there's two headwinds to what I would believe to be a continued rise in oil prices. One is U.S. demand is likely to moderate, and the other that we tend to forget about is the U.S. is producing more millions of barrels of oil per day now than we ever have. And so that's a big difference than where we were in the 1970s, for example.
And one reason why people say that the U.S. will be less affected than, say, a place like Europe, which has been something people have been looking at, especially with respect to how much of a tax it's going to be on the consumer. Right now in markets, you are seeing a bit of softness, but definitely nothing like the shock that we saw a couple of weeks ago. We're seeing futures lower by just a little bit. Brent crude lower when you take a look at the Brent contract, which is probably the one that you should look at since it was actively trading yesterday in Europe and WTI why was not as it is in the U.S. We'll be talking more about oil coming up. Stephen Short of the Short Group on a turbulent week for the oil market. And we're going to look ahead to what we can expect in terms of possible disruption or not, and how that really the ramifications of that throughout the global economy. This is Bloomberg Surveillance.
Bloomberg launches our inaugural 25 African Startups to Watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We integrated in every refrigerator a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
Of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that none of the guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
Finishing the week a little bit on a softer tone, although this has really been a pretty quiet week, almost unchanged on the S&P 500 for the full week, although today we could bring it into negative territory, down about 0.25% in S&P futures, still above 6,000 though, so not exactly a whole lot of pain. NASDAQ futures down around the same time. Russell 2000 has really been the outperformer, which is interesting given how much those shares have been beaten up. Futures there up about 0.1%, 3 hours from that cash open. Here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. We start with Circle up another 8% after a 34% rally on Wednesday. It is still gaining steam after the Senate, of course, passed that bill, giving stablecoins like Circle's USD coin a clear regulatory framework. And I will note, the stock has been on a tear since Circle IPO'd earlier this month, up 540% since then. Next up, we have shares of GMS. They are soaring up 23% on some takeover buzz. The Wall Street Journal is reporting that Home Depot has made a bid for the distributor of building materials, potentially setting off a bidding war with QXO, another company which just offered to buy GMS for $5 billion. But now with Home Depot in the mix, that price tag of $5 billion could go even higher. Next up, or last up, we have Tesla. Those shares are up 1.2% ahead of its planned robo-taxi launch in Austin on Sunday. But if you thought it was going to be an easy ride, no way. That is because there's reporting out there that Texas lawmakers are asking the company to delay the launch due to safety concerns. But that potential snag is not hitting the stock just yet. Lisa?
Thank you so much, Yahira. As long as they get it out there, people will get excited about the potential for that to revolutionize the way we and our children get around. On our radar this morning, President Trump saying he'll decide in 2 weeks about whether to strike Iran. Iranian officials saying the country does not plan on negotiating unless Israel stops attacks. Brian, I do wonder whether you change anything at all based on some of the potential turmoil in the Middle East. Have you changed any of your positioning or any of your potential outlook or put it on hold, or do you just say, we look through this because every time looking through this has been the right call?
We look through it because every time looking through it has been the right call. I mean, I always tell people, ask yourself 2 questions when conflict starts. Does it change the trajectory of the major economies of the world? Does it change what the major central banks of the world are going to do? Now, it ultimately could. We can all come up with a scenario where there's attacks in the Strait of Hormuz, where oil prices skyrocket and economies slow down meaningfully. But in its current construct, this is unlikely to change the trajectory of the bigger economies of the world or change what the central bankers are going to do. So I try to look through it, at least from a financial market perspective.
Yeah, it's such a strange thing to do, because from a human perspective, you see people's lives dramatically being affected, and then in markets, when you game it out, it just hasn't had that same kind of ramification. When we talk about that 2-week deadline, we also have to talk about the tariff deadline. There's reciprocal tariffs that are going to expire in terms of the negotiating period on July 9th. Canada opening the door to increasing tariffs on U.S. steel and aluminum next month if White House trade talks stall. The U.S. has placed 50% tariffs on foreign steel and aluminum. Canada has 25% counter tariffs in place on the U.S. Do you have the sense, Brian, that this is going to get reconciled in a way that is well below the worst case scenario, sort of around that 10% global tariff rate that a lot of people thought we'd end up with?
That's where it seems we're heading. I mean, it's hard to find people who do what I do for a living who don't believe that that's where we're heading. So I suppose that is a risk to markets. But my view on tariffs has always been that you will get less optimal economic outcomes as a result of them. They may be worth the cost if you want to defend security, if you want to defend certain industries. But to the market, what's most important is give us clarity. Let us know what this is going to look like, so then businesses and consumers can make adjustments. So I wouldn't consider it ideal, but it's a market that is currently set up for incrementally better policy than what we had feared. And so that's not I mean, that's a risk if we go the other way, but the base case, I think, is okay for this market.
2 weeks. You'll get clarity in 2 weeks. Meanwhile, we're also seeing some adoption of strategies to avoid issuing very long-term bonds around the world. Japan now planning to cut issuance of super long bonds by way more than expected. The finance ministry overnight proposing reducing issuance of 20, 30, and 40-year bonds by a total of $22 billion through the end of March 2026. The move coming after several months of record volatility in super long bonds, and it just highlights that we talk about deficits around the world and how they're whipsawing some of the long end of the yield curve, and how much there's going to be a response to this in Treasury issuance over here in the U.S. Say, back to the strategy that people in the Treasury Department have criticized that happened under Janet Yellen.
Yeah, but if you look at it, the 10-year is trading at, what, 4.4, and the 30-year is below 5. So we should take it with a little bit of contextualization here. But So far, the bond market auctions in the U.S. have been going okay. I mean, this has been a big story, but if I look at bid to cover ratios, generally in line with average. And if I were to have shut my eyes for the last couple of years and said, what should the 10-year rate be? And someone told me the real yield's around 2, inflation expectations is around 2.3, then where we are right now with the 10-year rate generally makes sense. So it's a bond yield in the U.S. that has largely been trading on nominal growth potential. Sure, a little bit of a pickup in the term premium, but nothing that investors should be overly concerned about. At this point, I hear a lot about it, the end of the U.S. being able to fund its fiscal deficits, the end of the dollar. That is not what the market is telling us.
All right, so let's turn to the other two-weeker, which is the situation with Iran and Israel. Turning to commodities, Citi warning that oil could reach $90 a barrel if the Strait of Hormuz is closed. Bloomberg's Julian Lee joins us now for more. And Julian, seems like this table being taken off the table, at least in markets, for the moment. Can you give us a sense of how big of a sea change this past month has been, where you've seen a more than 20% gain in terms of Brent and WTI crude prices, given the backdrop in the Middle East?
Yeah, look, I think that any time you get missile attacks on any country in the Middle East, particularly one of the big oil-producing countries, markets are going to spike. There is great concern over the flow of oil out of the Middle East, whether that's around threats to close the Gulf of Hormuz, whether it's around the potential for attacks on Iran's own oil export infrastructure, or whether it's retaliatory attacks on oil infrastructure elsewhere in the Gulf from Iran. Those kinds of fears all play into traders' assessments of the market. And we always get this kind of a spike in prices. Nobody's yet pricing in closure of the Strait of Hormuz. That would take prices even higher if people really thought that was going to happen. But this is, this is the stock reaction to what we've seen happening in Iran over the last week.
Just real quick here, Julian, how much do you expect this to be the predominating story for oil for the next few months versus a passing trend in terms of concerns about the Middle East?
I think it's really going to depend how it plays out, how quickly hostilities come to an end or don't. I think, as long as these attacks and counterattacks continue, the market is going to be very focused on supply issues in and around the Persian Gulf. If there is some kind of a solution to this, whatever that might look like, then I think those fears will ease for a while. But I think that what this shows us is that we are perhaps in for a period of instability, certainly around Iran and what happens there.
Julian Lee of Bloomberg, thank you so much. Right now, joining us is Stephen Schork of the Schork Group. Stephen, thank you so much for being with us. I just want to start on how much you think these price increases will last.
Well, just as Julian said, it's going to depend on two things. A further escalation in hostilities, which seems there's a distinct possibility that occurs, and how long these hostilities remain. So at this point, we're looking at a situation of, wait and see. The market now is certainly pricing in greater volatility. What we saw leading up to this, i.e. before last Thursday, was a market that was switching into contango. Both the Brent market and the WTI market, beginning in 2026, had switched to a contango market where prices for January are cheaper for prices than February and so forth. This is a classic fundamental telltale that the market was pricing in that supply was going to outpace demand. Now, of course, with what we've seen over the past week, that situation has now moved into, well, we're backwardation. So now January is trading at a premium and so forth. So the market is pricing in potentially higher prices through the end of this year and into the start of 26. And that has been the real sea change in the oil market over the past week or so.
Stephen, does the world have options with regards to supply if the hostilities were to persist or if the hostilities were to get worse than where we currently are?
we're kind of limited, Brian, at that point. Iran is still a significant player in the market. This all depends on whether we're going to see a disruption to crude oil coming out of the Persian Gulf. That seems highly unlikely. The Iranians are not going to cut back their production. They actually need that production. They need that export income. Second, they're not going to close the strait, I believe, because it would alienate their two major clients, India and most importantly, China. So if you did see a disruption to this oil, then that puts China and India onto the world market, especially with China, because 90% of Iran's exports go to China. And then you have the third factor is if you do see a disruption, i.e. a cutoff of the Strait of Hormuz, you're going to alienate your OPEC brethren. So that is to say that, look, if you know your history, you know there's not a lot of love lost between the Sunni Arabs and the Shia Persians. So at this point, you're probably getting some glee coming out of the Arab world of what the Israelis are doing. Now, if you cut off the Strait of Hormuz, then you're likely to see the Arab nations kind of come from their undergrowth of pushing, or I should say their glee with what's going on, and could actually push them into hostilities. From an Israeli standpoint, they're not going to take out Iran's production because best case scenario is you do see a regime change. And the last thing the Israelis want to do is to take the ability to make money out of that new regime's hands.
Do we have a sense of what the Chinese may be messaging to the Iranians right now?
Certainly, I think that there is some reports, and I'm certainly not a military strategist, that you are seeing some planes fly into Iran. Question is there military hardware on that? But certainly, I think more obviously is they are getting pressure from China that they do want a resolution to this. They do want a free flow of oil. We've already seen oil prices jump $10 a barrel over the past, 5-6 days. So clearly, this is going to be when 90% of the oil is coming from a nation that is causing, really, this spike in price. There is going to be pressure coming out of Beijing to ease the situation, i.e. ease prices lower.
I wonder what the production response is going to be. I saw that in the United States, a number of oil companies had taken their rigs out of production. I'm wondering how many of those come back online in response to the increase that we've seen in oil prices rising, how much this gives a boost to some of those companies that have really lamented how low prices on oil had gotten.
Yes, exactly, Lisa. So what we saw coming into this year was a survey by the Dallas Fed of the 11th District, which is the oil price. And slightly more than half the respondents, and the survey went out to oil executives as what price do you need to see for the increased CapEx? And slightly more than half of that price came in that $71 to $75 range. Now, WTI it took this process, this war, or I should say the expansion of this war, because this war began on October 7th, 2023. So you would need to see oil sustained over $75 a barrel until the industry is confident that
and how long are the tariffs going to last? And the question now is the magnitude of the stagflationary impulse, and we just don't know yet.
Don't miss Bloomberg Insight live weekdays.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Ending on the week on a softer note, looking at futures just lower a touch as you look to that 2-week period for so many different events to possibly transpire down 0.2% on both the S&P and the NASDAQ. In the bond space, super quiet after what we got from Jerome Powell, which wasn't a lot. A little bit higher today, but still below 4% on that 2-year yield, 3.94% on the 10-year yield, quiet 4.41%. Even on the 30-year yield, up just a touch, but 4.92%. Under surveillance this morning, waiting on inflation.
What we're waiting for to reduce rates is to understand what will happen with really the tariff inflation. What it will take is confidence that inflation is coming down. Now, I would say without tariffs, that confidence would be building. Everyone that I know is forecasting a meaningful increase in inflation in coming months from tariffs. Ultimately, the cost of the tariff has to be paid, and some of it will fall on the end consumer.
Here's the latest. Fed Chair Jay Powell saying tariff impacts are coming as policymakers wait for clarity. Stephanie Roth of Wolfe Research saying if tariff-driven inflation isn't visible in CPI, that would be concerning. To the extent CPI doesn't rise, that suggests someone else along the supply chain isn't absorbing the tariffs. Stephanie joins us now. A fascinating take after what we heard on Wednesday, I guess it was, where Fed Chair Powell said we will see the data change. If we don't, does that suggest that profit margins are actually shrinking considerably?
Yeah, exactly. And that would be the demise of the economic cycle. If we start to see profit margins roll over, then you start to see layoffs, and that would really become a self-fulfilling prophecy towards recession. If we end up seeing it flow through to CPI, which is very much our base case, and the consumers are likely to be able to absorb it, and we can kind of go on our way, and this could just be a fairly short shock.
Well, that really raises the issue of how the Fed considers this, because right now, based on their summary of economic projections, they do see an increase to inflation and a decrease to growth, but they don't see that as being a lasting inflation shock. Is that your base case as well, and do you think that allows them to look through that and still cut rates?
Well, look through that, yes, but the latter part, maybe not so much, and still cut rates. I think we're probably not going to see a rate cut for a while, maybe the end of 2026, realistically. The economy is likely to be okay, and this is where I would maybe differ from the projections, is the 2026 number. Because I think we might see growth 2% or maybe even a little bit above as we get the impact of fiscal from the reconciliation bill, one big beautiful bill. That could actually put some upward pressure on growth, and we might be seeing an upside surprise to growth next year, which would then make it a really tough environment for the Fed to be cutting.
What do you make of the recent rise in continuing claims? Are we starting to see some cracks in the job market? And if we are, shouldn't the Federal Reserve trying to be moving ahead of that?
I mean, I think what we're seeing is a labor market that is starting to cool down, but we should see that. The labor market's been hot for quite some time. And by the way, the steady state payrolls growth backdrop has slowed down a lot. So we need to see an environment where payrolls slow down. Otherwise, we're going to be really tightening the labor market and risking even higher inflation. So it's a good thing to see the labor market cool down. The continuing claims are rising fairly slowly. It's just a gradual cooling in the labor market, which is kind of what we need to see. And as for initial claims, we're likely to see just a continued rise over the summer. So that's something I would kind of look through.
Are you as calm or as happy about seeing how sustained the inflation expectations are, how stable inflation expectations have been, not only over 10 years, but also over shorter-term time periods?
Yeah, and I mean, to be fair, we're probably going to start to see short-term inflation expectations pick up on the back of oil prices. They tend to be most linked towards energy prices and food prices, so base case is that those will start to move higher. I think it is a good sign to see that inflation expectations have been tame. Of course, they were a little bit volatile around the initial tariff debacle, but now the tariff rates are settling down, inflation expectations are cooling, and I think that's just a sign that consumers get that this is not a real inflationary spiral.
How complicated is it to understand where we are in the economic cycle, given that you see a potential for an upside surprise in growth next year, at the same time that the housing market is so flat on its back that people don't know what to make of it?
Yeah, it is an unusual cycle. It's been an unusual cycle for much of this time, where we saw an incredible recovery after the COVID pandemic. I would say, based on our models, where we model where we are in the business cycle, I would say right now we have moved towards mid-cycle. We were at late cycle. We moved towards mid-cycle. There was a little bit more slack added to the economy, which is one reason why the housing market has certainly eased. It's that what I would classify as early cycle, but on balance, the economy is probably in mid-cycle. And the next year or so, we'll move towards later in the cycle again.
What does later in the cycle look like to you? How will we know?
What we'll start to see is the unemployment rate will start to fall at some point. Probably, certainly not this year, but next year we could certainly see some downward pressure on the unemployment rate again, start to see some inflationary pressures, and then we'll be sort of lingering towards later cycle again, call it 2027.
Which means not necessarily that the market's doing really well, but maybe that things are setting up for some sort of break, right? I mean, the idea of a really low unemployment rate that can't get much lower than what we've seen over the past couple of years, isn't that a real positive in terms of what we could get in the next 6 to 12 months?
Yeah, I mean, that's a positive. I think next year is shaping up to be a pretty good year when we're thinking about growth, earnings, markets. 2027, we might be starting to move to later in the cycle and risks start to rise again. The cycle doesn't last forever. So it is very possible at some point in the next 2 to 3 years, we end up in a downturn again.
Stephanie Roth, thank you so much of Wolf Research for all of your contributions for Fed Day as well as today. It feels like it's been a rolling 2-year cycle, just the way it's been a rolling 2-week cycle in terms of when the cycle will end. I mean, at what point do you look at all of this and say, this has been an economy that's been incredibly resilient and should be able to prove that it is once again?
It has been an economy that's been incredibly resilient, and I tend to get more worried about being later in the cycle when there's a lot of leverage and excess in the economy, which does not seem to be the case. We did get an inversion of the yield curve, which hurt small businesses, hurt different parts of the economy. But if you look broadly, the next things to look at are credit spreads blowing out, are bankers tightening lending standards. We saw a bit of that here and there, but that's not where we are currently.
Although the leverage is in governments, which is the reason why people are watching a lot of the government auctions.
but not showing up at the business side, and the banks don't appear to be over levered.
Which is the reason why people are wondering whether you could end up getting corporate spreads that are inside of where we see government bond yields based on the better profile. Brian Levitt of Invesco, thank you so much for spending the hour this morning. Coming up next, Dan Greenhouse of Solis Alternative Asset Management, Bloomberg's Akayla Gardner, Tom Nides of Blackstone, as well as former Kansas City Fed President Thomas Hoenig, as we look ahead to the next 2 weeks, which should be rather eventful. You're watching Bloomberg Surveillance.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
And Davos, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look at what's happened is because the interpretations of AML, anti-money laundering, BSA, Bank Secrecy Act, KYC, know your customer, know your customer's customer. You know, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, so we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes up in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity. Ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
separating the signal from the noise.
With some fun along the way.
This is Bloomberg Surveillance.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
We're back to where we were in January with a different set of risk and a different set of facts, which look worse.
When you look at this year, markets have gone through the entire range of emotions.
Yes, the market is very resilient, but yes, it's very well aware of what's going on.
There's clearly signs of softening, but everything's been very low grade.
The macro picture for now is still not too weak.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance as we look to a rule of 2 weeks. 2 weeks on a decision on whether the U.S. directly strikes Iran. 2 weeks until the tax bill is due. 2 weeks until the reciprocal tariff deadline. Danny Berger joining me for the next 2 hours. John and Emery are both off today. It feels like we're going to learn a lot in the next 2 weeks, but for now, it feels like we remain in the dark.
We're in the dark, but there's so much noise in the meantime, coming from geopolitics, coming from politics in general. But maybe what's the loudest has been the silence from this market. For this week, for stocks, it's been the tightest trading range since January. For bonds, the tightest trading range since December. There's not a lot of movement with a lot of the risks that you're highlighting on the horizon.
There's a lot of exhaustion right now as you take a look. S&P futures lower by about 0.2%, but you're right, on the week, basically flat. NASDAQ futures down about the same. Russell 2000 outperforming, and perhaps the reason why is in the 2s, 10s, 30s bond space. You see yields somnolent this week, also basically going nowhere today, up about 3 basis points on the long end, but still quiet, 3.94% on the 2 years. People look to dovish central banks around the world, really giving a boost to this idea that central bankers are looking past the potential inflationary hit and towards some sort of growth shock.
We do have a timing issue here. There was a really interesting study from the Danish Central Bank recently saying, looking at all the trade shocks from the 1990s, it takes at least a year for the economic effects start to filter in. So you get this feeling from the Fed, maybe they want to wait and see how inflation plays out. September has been made the timeline. Maybe we won't even know the real effects in September. It might take longer than that.
In the meantime, you are seeing, though, the Bank of England not necessarily move, but signal they are going to be cutting rates. The Swiss National Bank looking at negative yields again, cutting to zero and signaling that they'll do whatever it takes to get people to stop going into the Swiss franc. And you have this idea of even the Norges Bank coming out with a rate cut, a sense that globally there is a feeling that the inflationary shock has abated.
It has abated, again, for how long? There have been reports of stockpiling, and that means that the narrative of higher inflation comes longer on. One that is likely happy about this are governments, our fiscal policy. You see the likes of Japan this morning, for example, saying that they're pulling back on ultra-long bond issuance. The demand has been waning because of the uncertainty around inflation, because bond yields keep ebbing higher and you keep seeing losses there. So some of these cuts maybe will start to filter through and create more demand for bonds when policymakers need it so badly.
Yeah, this is a reason why people are maybe saying, or people being President Trump saying, look, if you cut rates by 2 basis points or 2 points, we're going to end up with much lower borrowing costs in the United States. So get on it, Jay Powell. And Jay Powell says, listen, I am not your guy. I am just doing my job. Coming up for the next hour, Dan Greenhouse of Solis Alternative Asset Management with stocks on hold. Former U.S. Ambassador to Israel, Tom Nides, as President Trump gives Iran time for diplomacy, and former Kansas City Fed President Thomas Honig as Trump lays into Fed Chair Powell yet again. We begin this hour with stocks muted as President Trump buys time in the Middle East. Dan Greenhouse of Solis writing this. Things really ramp up with tail risks becoming reality and oil approaches triple digits. Otherwise, Markets are in a bit of a dead zone until the next jobs report. Dan joins us now to talk about that dead zone. Dan, thank you so much for being with us.
Thank you for having me.
It feels like, why would anyone get long risk right now, heading into this weekend, given the fact that a lot of things could change and it's very hard to really get an edge on it?
Yeah, the quote you just read is sort of I did a poor job of articulating what I was trying to say in a larger sense, but the triple-digit oil scenario is in a worst-case scenario, if you will, where we end up bombing the Iranian nuclear facility and things spiral a bit out of control. And so from a trader standpoint, you are certainly a little reluctant to be long risk into a weekend when something like that can happen. Although, admittedly, you're probably taking some comfort from the president saying, yet again, a decision will be made in the famous 2-week time frame. So perhaps you think, okay, well, maybe not this weekend, but at this point, we're living through a moment where any time in the next 24, 48, 2 weeks, you could have an attack on that facility. And to be clear, I think all the foreign policy reporting is that all the tools are in place for that to actually happen. The question is, at this point, just a matter of when.
There is a question also of just whether we do get clarity in the next 2 weeks. There's been sort of a rolling 2-week time frame that we keep getting. Yes, it'll show up in the data, maybe in 2 weeks. Yes, it'll show up in some sort of policy decision in the next 2 weeks. At what point do you count on clarity, or do you say, you know what, this is the new normal, we're going to go into what we know, and we're going to basically stay away from whatever we don't?
I think for now, I think you said on the show the other day, the only certainty right now is uncertainty, or the scarcest commodity is clarity. Someone said something like that. It was really terrific. I think some version of that sentiment is true. The 2-week time frame I do disagree with. I mean, the situation with Iran is going to be with us for a little while. Obviously, bombing or not bombing, we'll know when it happens. But the larger story about tariffs is going to be with us for a while. I mean, I have disagreed with people who have taken total comfort, as you alluded to in the opening monologue, that for now the tariff story is not played out, and so markets are at a high, spreads are at their tights. The story from my standpoint was always going to be in the middle to end of the summer. So it's when you get the July inflation report in August or the August inflation report in September, you're going to have a lot more clarity by then. Until then, my argument for being long risk assets, as we were selling off, is you're not going to have that clarity, or at least the first inclinations of that clarity, until later in the summer, in which case, why are we down 20% off the highs? And so I disagree with and not that you said this, but I disagree with the idea that 2 weeks is the time frame. I'm operating more in the next 2-month time frame.
If we get something in the 2 weeks that looks like U.S. involvement, it maybe is a shock, but it's another one of these shocks that I don't know if we can count it as such, because a shock is supposed to be something you don't see coming. And we keep getting a lot of that, be it geopolitics, be it coming from the White House, be it policy. Does that mean for these types of shocks, I'll keep calling it, how we trade it and how we treat it is different than how we usually did in the past?
That's fair. That's fair. The fact that we're all waiting for some explosion, and when the explosion comes, doesn't make it any less shocking. I mean, I asked my wife out. I thought she'd say yes, and she did. I was still fairly shocked. She's quite fetching. But that issue, I think from an investor standpoint, whether you're in credit or equity, structured products or commodities, we're all sort of looking at the same thing, which is, when is this going to happen? Is it going to happen? And what are the effects? And there are really 3 things that you're wrestling with now. One is what looks likely to be happening right now, which is just the status quo. Ongoing hostilities, skirmishes here or there, et cetera, and oil in particular holds at this mid-70s level for a prolonged period of time. How does that operate? You've already seen retail gasoline at the pump tick up. It was $3.10, $3.12. Now it's $3.20. So consumers might, for the moment, pull back. Another scenario is that clearly nothing's going to happen, and oil is going to probably fall back into the mid to low 60s, if not further over time. And then the tail risk scenario, to the question about being long risk into the weekend, is that we bomb Fordo, and they attempt to close the strait. And while I think there are fair questions about the Iranians' ability to close the strait if they tried, the attempt to do so is going to be good for $100 oil. And that was the point I was getting at earlier. And then what does the risk landscape look in the short term? Again, I think the longer-term issue is Iranian forces are probably not going to put up too long of a fight against the U.S. and Israel, the combined forces. However, in the short term, are there missiles lobbed into Saudi Arabia? Do they attempt to close the strait and hit a ship or two? Those issues are what you wrestle with and could lead to, certainly would lead to some destabilization in the short term.
I mean, that is a fat, ugly tale. But do you understand what oil would do? Do you understand what other risk assets would do? How prolonged any sort of weakness there would be, given the very short bouts of weakness we've seen this year?
I mean, you can build a framework for historically what happens during the situations when oil jumps up by 25 bucks, call it 25%, 30% in short periods of time. Equities will probably be down 10% off the highs, if not more. Gold will spike, et cetera, et cetera. You can build a framework for what that's going to happen. The problem is, from an investor standpoint, is you really have two different types of investors here. One is, oh, this is fun, I'm going to try to exploit these issues. And then there's a whole chunk of us that are like, well, I invest over longer time frames. I put money to work in companies, we invest in the companies, we lend money to companies for 3, 5, 7 years, in which case what happens over the next 3 months in the oil market is largely irrelevant.
So basically, some people are saying this is fun, and then the rest of you are saying not so much. Can you give us something to actually work with? Let's talk about what we actually do know. Yep. Because I was looking this morning and thinking, okay, there's a lot that we don't know that's going to be decided in the next 2 weeks. But there's some things that we have learned in the past couple of months. Number one, AI is still here, robots still threatening to replace us, and people who can program them, create them, envision them, all right, let's just leave it alone, but et cetera, are going to be paid $100 million bonuses and are in great demand. Okay, that is still something that we're seeing profitable. We're also seeing that central banks globally are leading to the dovish side, and that is notable. And it is led by Europe, not the US, which really threatens the whole dollar trade, but I'll leave that aside for just 1 second. A real question of how much that gives a tailwind, certainly to markets overseas. Yes, we don't understand what's happening on the geopolitics, but how much do those two themes alone send you more into certain risk assets that you can count on because you can bank on these particular threads?
So we've talked about this in the past, and any number of other people have as well. The AI story, I think, clearly is here to stay. And whether it's NVIDIA or Broadcom, et cetera, for a year now, 2 years now, there's been a little smoke. You've had, well, we're not going to invest in that data center as much. The DeepSeek Monday was a moment. But the CapEx story remains in place. The investment story remains in place. And to your point about the $100 million bonuses, which, by the way, I don't believe that. But
really, you would take it, right?
$100 million bonus?
It's okay. You don't have to answer. I mean, anyway, if Solis, he's doing great.
So how do you know Solis isn't giving me $100 million?
All right. Carry on.
They're not. But that story is still an important theme in markets. And when you look at the factors that have worked this year, size across spaces has been one of them. And I'm looking now, Microsoft is up 14%, NVIDIA is up 9%, Meta's up 19%, basically at a high. The only one of those big names that's not working is Apple, because the street generally views them as having missed, at least thus far, the AI trade entirely. Now, we'll see in the fall whether that's the case or not. But that theme is wholly in place in the market. You see it in utilities are the third best performing sector. That's because of Constellation and Vistra and the deals with Amazon and Microsoft. So that story is wholly in place. The replacing us, man, I know everyone's talking about this.
Yeah.
I saw a debate the other day, the 30-hour work week that was predicted 100 years ago is finally, no. I don't think that the history of the United States and productivity-enhancing technological advances, the cotton gin is the one everyone uses, but what about the ATM machine or the computers in the 1990s, et cetera, has always resulted in just a reorganization of the economy, not a replacement of the economy. And I was just reading Chip War, the book about, obviously, semiconductors, and he was talking at one point about all the women that were employed connecting the wires into the wall. That obviously was replaced by switches, by Cisco, and all those people had to find new jobs, and they did. And I can't imagine that this time is not going to be different. The idea that we're all going to be sitting around playing tennis all day, Danny.
I feel attacked. It's okay.
Worrying about how we're going to kill 40 hours or 100 hours a week, no matter how much you work. I think that's science fiction, at least for now.
Right now, I will just say this is the topic of discussion in my household. And one family member was saying, I want to invest in robots that treat us like rich pet owners treat their dogs. So I have to wrap my head around that and look for that company. Down Greenhouse is Solis Alternative Asset Management. You don't have to respond to that. You will be sticking with us right now. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. The White House says President Trump will make a decision on whether to strike Iran within the next 2 weeks. White House Press Secretary Caroline Leavitt says the president's goal of preventing the country from obtaining nuclear weapons remains intact. She added, however, that if there's a chance for diplomacy, the president is always going to grab it. Meanwhile, Pop Mart shares tumbled in Chinese trading after state media called for stricter regulation of blind box toys and trading cards. China said some business models induce minors to become addicted to purchasing these products. The warning did not call out Pop Mart by name, but the company is well known for selling those blind box toys like its popular Toothy Monsters Labubu dolls. And a 16-year-old restaurant in Lima, Peru has been named the best in the world. Maido specializes in Nikkei cuisine, which is a combination of Peruvian and Japanese flavors. The top 5 restaurants on the list are located in Peru, Spain, Mexico, and Denmark, with Italy and Bangkok having a strong presence in the top 50. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. What didn't have a strong presence was the United States, with just one restaurant, I believe, Atomics, in that top 50.
It's okay, we got a Pope, so we'll, you don't need the top 50 restaurant.
There you go. You heard it from Danny Berger. Up next, a rift in the GOP.
The Senate needs to recognize they can make changes, they can enter into negotiations, but the fact is you need 218 votes to pass this in the House, and there is not a chance in hell that this bill will pass at $10,000, let alone less than $40,000.
The SALT contingent is going strong. Bloomberg's Kayla Gardner joining us next. This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Finishing up the week on a little bit of a softer note, but as Danny said earlier, this has been one of the tightest trading ranges all year that has ended the week potentially almost unchanged. Right now, we're down about 0.2% on S&P futures. We are seeing a little bit of a sell-off in the bond space with that reprieve of 2 weeks, maybe, to make a decision, up about 3 basis points, 4.42% on the 10-year crude prices. In New York, up a little bit, but on the Brent contract, you can see a decline as that sigh of relief does continue. Under surveillance this morning, a rift in the GOP.
The Senate needs to recognize they can make changes, they can enter into negotiations, but the fact is you need 218 votes to pass this in the House, and there is not a chance in hell that this bill will pass at $10,000, let alone less than $40,000. I guess people, want to try and call our bluff. They tried that in the House. They tried to jam us, and we didn't fold.
Here's the latest. The battle within the GOP rages on as the big, beautiful bill's deadline nears in, guess what, 2 weeks. Joining us now, Bloomberg's Kayla Gardner. Kayla, how much are we seeing fissures that threaten to really derail the July 4th timeline for the one big, beautiful bill?
So the issue that you saw Congressman Mike Lawler talking about there is the SALT tax. The threshold that was passed in that House bill was $40,000. And in this Senate version of the bill, it's as low as $10,000. So there's deep disagreements, I should say, between Republicans in both of these chambers, particularly because they say it's an issue of fairness. This provision essentially allows filers to reduce the amount of taxes that they owe on their taxable income by the amount they already paid to state and local government. So that means a lot for people in places like New York, California, the suburbs of Washington, D.C., who make wealthy amounts of income. And yet you have people, Republicans in states that are lower incomes, saying this is unfair, that they feel as though their constituents are subsidizing this issue. There's also other risks. One is Medicaid. You have the Senate bill having deeper cuts to Medicaid. Basically, there could be millions of Americans who lose their coverage under the House bill and the Senate bill that has basically even more thousands of people that could lose that bill. And then, of course, there's the deficit. You have hawks in both the Senate and the House, and there's such a delicate balance. You saw that House bill take weeks to negotiate, and this Senate bill still has to go back to the House before it can be fully passed.
Kayla Gardner, thank you so much for that update. Dan Greenhouse of Solis Alternative Asset Management still with us. Dan, how much downside potentially is there in markets if this bill does not get approved, passed by that July 4th deadline?
An enormous amount, but I don't think that's very likely at all. The bill is passing. The only question is in what form. The TCJA was such a important bill at the time. It remains, obviously, President Trump's signature legislative achievement, and the idea that this would not pass is fanciful as far as I'm concerned. So the only question is, we know we're not going to have a $40,000 SALT deduction. We know we're not going to have a $10,000 SALT deduction. So the only question is whether it's $20,000 or $30,000. And then the rest of the stuff is, I don't want to say tinkering. Obviously, the Medicaid issue and the Medicare issue is a problem for a number of senators, Josh Hawley perhaps most prominently, but they're going to work this out. And we go through this every cycle when there's debates, whether it's with Democrats or Republicans, intra-party squabbles. We're watching the sausage get made, and so when you watch the sausage get made, you go, oh, that's gross. But then in the end, after 3 to 5 minutes on each side on the grill, the sausage is quite delicious. And I think that's what's going to happen this time as well.
George Sovalis of Deutsche Bank hasn't been talking about the deliciousness of the sausage, but has instead been saying whatever sausage gets made, it's what we're stuck with for at least a decade, because you're going to have the midterm elections, likely see more division in the House and Senate between the split of lawmakers there. The reconciliation process is very difficult. So what we get this time around is set in stone. Does that increase the risk of when you have expanding deficits, that it's going to be with us for some time, and it's harder to do an about-face if it is a market that starts to push back against it?
Yeah, of course. The U.S. government is, to some degree, designed to be sclerotic. There's no doubt about that, and that in many times is quite helpful. The government that governs least governs best, and I generally subscribe to that view. There are times where you need to do things, and I think the longer you delay, not I think, clearly the truth is, the longer you delay the inevitable fixing of our budget and spending issues, the worse the adjustment is going to be. And it really is a crying shame that we can't figure out some way. We're going to have a $2 trillion deficit next year in an expanding economy with essentially a record low unemployment rate. That is remarkably bad. We should be something close to a balanced budget, if not an outright surplus. Obviously, we've only had surpluses for a brief period of time in the late 1990s, but like it is just an absolute. I can't even. I don't even find the word. I can't believe Congress can't figure out how to, over the next 4 years, reduce that deficit, and it can be done. To be clear, this isn't brain surgery. The problem is, as my favorite saying goes, everyone knows what has to get done, just nobody knows how to get elected once they've done it. And it really, listen, it is a mid-single digit called 6.5% of GDP budget deficit. Getting to zero is going to be incredibly difficult by the end of the president's first term. Could I get you to 3% or 2%? I think I could. Now, again, I have the luxury of saying that from this overly air-conditioned studio here in New York and not from having to get elected in Washington. However, it can be done, and we're not doing it. And when we do finally have to be forced to do it, presumably by the market, it's going to be way more painful than it would be had we do it now
Do you really believe this is a market that's going to force it? I mean, even things like auctions have been totally fine. Treasury holdings haven't really diminished that much against foreigners. For all the fear of a buyer's strike, it hasn't materialized.
To be clear, I'm not insinuating it's going to happen today, tomorrow, or the next day. This is the bond market has proven for long periods of time to not care about this stuff. And if you look at the Japanese market, obviously their debt to GDP dwarfs what ours is, and not that the Japanese economy is one we should model ourselves against, but they haven't had a bond buyer strike there. Granted, a lot of that debt is held domestically, and increasingly some of ours as well. So no, I don't think the deficit matters. And I have this fight with people internally at Solus, and I used to at BTIG as well. People would go, oh, how is this, who's going to buy the 30-year? Everybody. There's clearly no problem with this, and I think this will be one of those Greek moments where it doesn't matter until it does, and I have no ability as a market strategist or market economist to forecast that. So advocating investment strategies around the inevitable is farcical, because I have no way of knowing when it's going to happen.
All I hear from you is take the summer off. That's just my sense. But Dan Greenhouse of Solus Alternative Management,
Worse advice has been given.
Yeah, I'm just saying, I think that that's such a terrible idea. That's essentially what Jay Powell was saying on Wednesday.
He might as well have taken the day off on Wednesday. I think in 2025, that's a great accomplishment, though, to be boring and to not move the markets. I think in this day and time, it's a great thing.
It was a raging success. Dan Greenhouse of Solus Alternative Asset Management, thank you so much for spending time with us this morning and for not taking the day off. We appreciate it. Honestly, this has been something that we keep talking about, that why make any big moves in this market, but it does feel like we have learned something with respect to the resilience of different companies, and CarMax actually came out with earnings this morning that also beat estimates because people are buying used cars. Again, the resilience keeps on being that theme.
I was really shocked by when we spoke to Dan Skelly earlier this week, saying only 10% of companies had incorporated some tariff downside into their earnings. How much of that is that there isn't that much downside, or that they know they'll get punished for doing so in this market?
Yeah, it's a great point. The idea of how much is messaging and how much is in reality. They can adapt and they can adjust. Coming up, former U.S. Ambassador to Israel and Vice Chairman of Strategy and Client Relations at Blackstone, Thomas Nides. He will be joining us next as we look at markets a bit on edge ahead of the weekend. This is Bloomberg Surveillance.
of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that none of the guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg. Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Finishing up a quiet week with a quiet day as we wait for some sort of understanding of what's going to happen between Iran and Israel, how the U.S. may or may not get involved, as well as, of course, the 2-week deadline for the trade negotiations, as well as the tax bill down in Washington, D.C. Futures lower by about 0.2% on the S&P and NASDAQ. Russell 2000 doing much better, up about 0.5%, as people take a look at the likelihood of a more dovish central bank regime in the weeks and months ahead. 2 hours away from the cash open, here is your Morning Movers with Yahaira Anand. Yahaira.
Hi, Lisa. We start with the largest used car retailer in the U.S., and that is CarMax. It just reported earnings, and shares are up nearly 10% because the results were solid. It posted higher profit and higher sales in the first quarter. Not a surprise at a time when shoppers are looking for ways to avoid tariffs. And of course, buying a used car is one way to do it. Next up, we have shares of GMS. They are soaring up 28% on some takeover buzz. The Wall Street Journal is reporting that Home Depot has made a bid for the company, which distributes material products, potentially setting off a bidding war with QXO, which just offered to buy GMS for $5 billion. Of course, now with Home Depot in the mix, that could set that price tag even higher. And we end with Smith & Wesson. Those shares are tanking down 13%. The gun maker reported results after the bell on Wednesday, and the results were not good. It says that it will face another challenging year as demand for its guns continues to cool. That's because it says broader economic issues like inflation and tariffs are making customers think twice before buying their guns. Lisa?
Thank you so much, Yahaira. On our radar this morning, President Trump saying he'll decide whether to strike Iran within 2 weeks, leaving room for negotiations. This, as Iran says, it won't come to the table as long as Israel continues striking the country. Danny, this is the will they or won't they scenario that's keeping a lot of people on edge.
Trump leaving the door open for diplomacy, but even just what you're suggesting there, is diplomacy really an option? Does the U.S. have the sway to tell Israel to stop attacking Iran if that's the terms and conditions for Iran to actually have some sort of negotiation? We know what Trump wants is total surrender. It's also hard seeing Iran do that. They need some sort of face-saving operation domestically when nuclear ambitions have been part of, again, domestically, their operations going forward. So how do they give that up? They're meeting with European ministers today. Does Europe even have sway? So there's a real question as to what form diplomacy can take at this moment.
Yeah, in the meantime, people are trying to game out exactly what it could look like in markets, with some saying oil prices could jump to $90 a barrel if the Strait of Hormuz is closed. That's according to analysts over at Citi. About a fifth of the world's daily oil output passes through the strait. Citi adding that a prolonged halt to the shipping through that waterway is unlikely. And Danny, that's what we keep hearing. Why would they shoot themselves in the foot, not only with their own income, but also with some of their neighbors in the region who would not be particularly happy if they did this.
And not just their neighbors, but China too. 90% of Iran's oil exports goes to China. It's one of their few friends in this moment right now. You could argue, well, maybe there's a risk from the Israeli side, but of course, if Israel does something to close the strait, that would upset the Americans. I should just say the risk is there. There were two particularly hawkish members of Iranian parliament saying that this is a real option for them, threatening directly to close the Strait of Hormuz. So threats have been made, but there are real constraints to doing so.
How much does it feel like people are just kind of exhausted in markets and gaming out the worst case scenarios? Because we've had a lot of them over the past couple of months, and not a lot of them have come to fruition. So at a certain point, it feels like people aren't willing to really acknowledge the worst case scenario since they've gotten burned again and again and again.
It's so true. The noise has become deafening and made it silent for the market, but it almost kind of feels like death by a thousand cuts. You keep getting disruptions, and you can say, I'll ignore this one, I'll ignore this one. At what point does it add up and create real issues, be it a consumer who doesn't want to buy because they're concerned where things are going, or a global economy that actually starts to feel inflationary impacts?
Great point, and it brings us to what we've also been focusing on, which what have some of the implications been for some of the commercial segues, given the fact that we have seen tariffs and they have made a material impact on how people get goods. U.S. tariffs taking a major toll on Chinese exports in particular. Small parcels shipped from that country to the United States dropping by more than 40% in May. The disruption fueled by the end of the de minimis exemption, which had let packages valued under $800 enter the United States duty-free. It just is a reminder that things have changed and that there have been real-world ramifications from some of the tariffs that, yes, are still getting negotiated, but are still on also.
Right, and these are cheap goods that are no longer finding their way to the U.S. And the logical conclusion is that if people wanted to buy these sorts of things, they're either not buying and demand is pulling back, or they're buying it elsewhere and paying more for it. I was talking with a company that supplies Amazon and Costco for furniture products, and they have warehouses in the U.S., and they said that Amazon and Costco completely cleaned out their warehouses. They bought everything they possibly could with prices that happened before tariffs were put on. At some point, these companies are going to restock. What does that look like? How much higher do prices go? At some point, you'd imagine we will see tariff impact.
And that's the reason why Fed Chair Jay Powell said he is on hold to understand what those impacts could be and will be to CPI. Turning now back to our top story, President Trump expected to make a decision on striking Iran within the next 2 weeks, saying there's a substantial chance of negotiations in the days ahead. Joining us now is Tom Nides, former U.S. ambassador to Israel and vice chairman of strategy and client relations at Blackstone. Thank you so much for being with us. Tom, I want to start with the idea of Israel's endgame, given your experience working with them. Do you have a sense of what they would like the outcome of this conflict to look like?
Well, first of all, thank you for having me. And it's very simple to eliminate the threat of a nuclear Iran to attack Israel. It's not much more than that, and that's a very big deal. Think about what Israel has gone through the last 6, 7